You can't really describe this place without seeing it yourself. It's like Jurassic Park with this Mexican twist. When we started Cactus Country, it was only a quarter acre in the backyard. Dad had the vision from the word go. He knew that people would come from far and wide to see it if he could build it big enough. He just kept planting, kept expanding. 28 years later, we've got a 12-acre cactus garden. We've got our cafe, a little bar. We sort of branch out into a lot of different things. Jay's our small business manager, and what's great is that he actually comes here and sits down with us and helps us get projects pushed forward quicker. We've grown from 4,000 to 25,000 visitors in 4 years. It's a real partnership. Jay's just been incredible to work with. We felt like Bendigo Bank was more of a local bank. A part of it is just this sense that you're giving back to the community and you're still getting the really competitive rates as well. We definitely have a mantra, go big or go home.
Welcome to the 2020 Bendigo and Adelaide Bank Virtual Annual General Meeting. Now our Chair, Jacqueline Hay.
Good morning, I'm Jackie Hay, Chair of the Bendigo and Adelaide Bank Board. The time is just after 11 a.m. and I am informed we have a quorum. As such, I'm pleased to declare the Bank's 2020 Annual General Meeting open. I take this opportunity to acknowledge the traditional owners of the many lands on which we are all meeting. I recognise their continuing connection to land, water and community, and I pay my respects to their elders, past, present and emerging. I would like to extend a special welcome to all of you today. This is our first virtual meeting of shareholders, with everyone joining us online or via telephone. It is certainly a change from the way we've done things before, but we're glad to be able to engage with more of our shareholders from far and wide this year, despite it being in a slightly different way. For those watching this broadcast online, I'm pleased to be joined this year by Ryan and Brooke, who are Auslan interpreters. And for those who are not able to watch the broadcast online and are listening via the telephone, I extend my welcome to you also. Before I cover the order of events for today's meeting, I would like to raise that today's proceedings have been structured to provide all shareholders or their proxy holders with an opportunity to participate in the business of the meeting in an orderly fashion. When the time comes, I ask those putting questions to the board or the auditor to be courteous, fair and respectful to all shareholders. There is an expectation that shareholders' questions will be concise and about the matter which are relevant to the business of the meeting. This will ensure the meeting is conducted in the interests of all attending shareholders, and I'll explain later how questions will be handled. Also, as this is a meeting conducted in a virtual manner, technical issues beyond our control may arise. In the event there is a technical disruption to today's proceedings, we will adjourn the meeting and resume at 1 p.m. Australian Eastern Daylight Time. If this resumption is not possible, we will issue an ASX announcement with further information. The order for today's business will commence with an address by me, followed by an address by our Managing Director, Marnie Baker. We'll then take questions on the management of the bank and the annual financial report. Given we are not able to interact personally, I will try to make this virtual format as engaging as possible and will aim to involve some of my fellow board directors where appropriate, so that you hear from a number of us today. Thereafter, we will move to the items of business of the meeting requiring formal resolution. After taking questions, we will display the proxy results for each resolution which were submitted ahead of the meeting. You will be able to vote on all resolutions as soon as voting opens. To ask a question via the Lumi app on your mobile device or online, you will notice a speech bubble icon on your screen. This will be visible if you are eligible to ask questions today. This will open a new screen where you can type in your question and send it using the arrow symbol. You can submit questions at any time, though if they concern a particular resolution, they will be addressed at the relevant time during the meeting. Where there are multiple questions which are the same or have a similar theme, we will group these into a single question. And while we'll try to answer as many of your questions as possible today, it may not be practicable to answer every question, but we will certainly do our very best. I will ask Mr. Robert Musgrove, our General Manager, Corporate and Public Affairs, who is helping me today by reading the questions put forward to shareholders, to identify the name of the person or company putting forward their questions. I'm pleased to advise we received a number of questions from shareholders ahead of the meeting. Thank you for doing so. We have, wherever so possible, covered these questions as part of either mine or Marnie's address. And as I've said, we'll answer as many of these as we can during the meeting. For those questions submitted in advance, it was not sufficiently clear whether shareholders gave us permission to use their names, so I'll ask Robert to identify the geographic location of the person or company that has submitted their question. As mentioned in the notice of meeting, voting on each of the proposed resolutions will be conducted by poll. Thank you to those many shareholders who have voted in advance of the meeting. To vote during the meeting via Lumi, you will notice a voting icon appear on your screen. This will be visible if you are eligible to vote today. Clicking on this icon will bring up a list of the resolutions. To cast your vote, simply select one of the options. After voting closes, we will then conclude the business of the meeting. I'm pleased to introduce to you your Board of Directors. Our Managing Director is Marnie Baker, who is with me in the studio today. Marnie was appointed to the role of Managing Director in July 2018, and over the last 3 decades has held leadership positions across almost all areas of the group, including Treasury, Capital Markets, Technology and Payment Systems, Digital Strategy, Retail Banking and Funds Management. Marnie has and is currently Deputy Chair of the Australian Banking Association Council, a member of the Business Council of Australia, a member of the Mastercard Asia Pacific Advisory Board and a member of La Trobe University's Bendigo Regional Advisory Board. Also with me in the studio today is Tony Robinson. Tony was appointed to the board in 2006 and currently chairs the Board Governance and Human Resources Committee. He is also a member of the Board Audit and Technology Committees. He has had many years' experience in financial services and has held senior executive roles with several listed financial services companies. Tony will also address you a little bit later in the meeting. Rob Hubbard, who's joining us today from Queensland, is Chair of the Board Audit Committee. Prior to joining the board in 2013, Rob was an accountant, auditor and partner with PwC and was lead auditor with several large listed companies. Rob will address you shortly when we get to the agenda item dealing with the financial statements. Rob is also a member of the Board Risk and Board Technology Committees. The next director I'd like to introduce is Jan Harris. Jan has been a director of the bank since 2016. Jan has a solid career in the Commonwealth Public Service, working in a variety of senior roles in the Department of the Treasury and the Department of Prime Minister and Cabinet, including as the Deputy Secretary of the Treasury. Jan is Chair of our Board Risk Committee and is a member of the Board Audit Committee. She's joining us today from Canberra. Next is Jim Hazel, who joins us from Adelaide. Jim has been a director of the bank for the past 10 years and brings extensive experience in banking and finance to the board, having worked in numerous banking roles, including as a senior executive with the Adelaide Bank. He is a non-executive director of several public companies and currently a member of our Board Credit and Board Risk Committee. Jim will be seeking re-election as a director later in the meeting. David Matthews is a farmer from the Wimmera region and has been a board member since 2010. He is a member of the Board Audit, Credit and Governance and Human Resources Committee. David is a pioneer and advocate of our community bank model, which has had its beginnings in the 1990s in David's hometown of Rupunyup. He represents the bank on the Community Bank National Council and is chair of the Agribusiness Advisory Committee. David joins us today from the Bendigo studio. Joining from Melbourne is Vicki Carter, who joined the board in 2018. Vicki's career spans over 30 years, primarily in financial services and more recently in technology. She has held executive and senior management roles at Telstra, NAB, MLC, ING and Prudential Assurance. Vicki is chair of the Board Technology Committee and is a member of the Board Credit and the Board Governance and Human Resources Committee. And finally, I'd like to introduce David Foster, who also joins the meeting today from Queensland. David has significant experience in finance and an executive career spanning 25 years, primarily in financial services with Westpac and Suncorp, including as a CEO of Suncorp Bank. David was appointed to the board in 2019. He is an experienced non-executive director and holds several directorships across a range of listed and government organisations. He is chair of the Board Credit Committee and a member of the Board Risk Committee. I would also like to acknowledge that in attendance today we have a number of the bank's executive members, as well as Mr Graham McKenzie and Mr Luke Slater, who are the bank's lead audit partners from Ernst & Young, and Ms Carmen Lunderstedt, our company secretary. Mr Robert Musgrove, who I mentioned earlier, will announce submitted shareholder questions to the meeting. I will now present my address. Given my election as chair at the end of October last year, today's meeting is my first in this privileged position. While the year has passed in what seems like the blink of an eye, to put things in perspective, this time last year, terms such as coronavirus, pandemic, self-isolation and social distancing were barely understood, and in the case of pandemic, rarely used in our daily vocabulary. What a difference a year makes. My first year in the role can be best characterised as one full of new challenges, but also some satisfying accomplishments. The unprecedented events of 2020, starting with devastating bushfires, destructive floods, prolonged drought, and then the COVID-19 pandemic, have forcefully reshaped our understanding of our world, sparked a reappraisal of what matters most to us, and led to a re-examination of how we think, act, and engage as a community. While our collective circumstances may have dramatically changed in a short period of time, it has been inspiring to witness the courage, resourcefulness and adaptability of all Australians in the face of incomparable levels of uncertainty. One absolute certainty in our new normal is that change is everywhere, and those who fail to embrace it will be left behind. While the fundamental purpose of our business has not changed, the operating environment has continued to be disrupted by the events of last summer and the COVID-19 pandemic. This is true in relation to the economic and health impacts we face, the loan deferrals offered to residential and small business customers, how consumers now behave and what they expect, many new and emerging technologies, and continuing regulatory and government requirements. We care deeply about our customers, our people, our shareholders, and the communities we all live and work in. It has been a difficult year, and it is affecting most parts of our society. We believe this burden should be shared, and therefore the board and managing director will take a reduction in our board fees, or fixed pay in Marnie's case, of 10% for 6 months from the 1st of November. We think this is the right thing to do as we continue to work hard to support our customers, shareholders, people and communities. Looking ahead, we expect market conditions to remain challenging in FY21, and as a result the board, after strong and prudent consideration, decided to defer its final dividend determination during our FY20 final results announcement. This decision was not made lightly and needed to take into consideration the continuing market and economic uncertainty and APRA's industry guidance on capital management. Whilst we were pleased to be able to pay out 31 cents per share in March this year, we do recognise the difficulty the final dividend deferral may have caused to some of our shareholders. At this point in time, the board continues to closely evaluate the ongoing challenging and uncertain market conditions and will further review this decision as part of our first half-year dividend considerations in February 2021. As you would expect, we also continue to conduct ongoing scenario analysis and stress testing to support our strong balance sheet and capital position. With total capital as at the 30th of September at 13.53% and CET1 at 9.26%, well above unquestionably strong levels. We've also had other achievements this year to be proud of. Our multi-year strategy to reduce complexity, invest in capability and tell our story continues to reshape our business for the future and better positions us to deliver on our vision to be Australia's bank of choice. Examples of this strategy in action include the strong, well above system growth performance of our consumer banking division, a 1.3% year-on-year increase in agribusiness lending, as well as the continued success of our fintech partnerships with our Up Digital Bank and Bendigo Express instant home loan technology offering. We have also increased our focus on transformation and on ensuring our cost base is as efficient as possible to allow for future investment, while simultaneously maintaining our market-leading Net Promoter Score. Your Managing Director will elaborate more on these items in her speech. We will continue to embrace change. Agility is the order of the day, and it's clear the organisations that adapt and transition best to meet the new demands of their stakeholders will be the ones to succeed and ultimately feed into a stronger and more robust Australia. Bendigo and Adelaide Bank is no different. And this bank has been playing and will continue to play a very important role in our nation's recovery. For all that we have accomplished this year, we recognise that if we are to achieve our vision to be Australia's bank of choice and respond to this era of economic and social uncertainty, we must continue to accelerate the transformation of our organisation. The essence of what we do will not change, but the means by which we do it must continue to evolve for the better. One thing that will not change is that our values and purpose will continue to form the basis for our method of administering effective corporate governance. Our approach has long been one that considers what is the right thing to do to achieve better outcomes in balancing both the short and long term for the benefit of shareholders and all stakeholders. Trust is our most valuable asset, and it has led to consistently strong and market-leading performance based on feedback from our customers in leading corporate reputation indices. However, like any organisation, we do sometimes make mistakes, and when we do, we take ownership of these and action to fix and remediate any errors. This is what we've done in the past and will continue to do in the future. Next, I want to turn to climate change and the impact it continues to have on the quality of life and financial position of our customers and their communities. Our bank supports long-term strategies that contribute to a more sustainable future for all our stakeholders. This year, the Board and Executive were pleased to adopt its Climate Change Policy Statement and Action Plan. This statement replaces and builds on the Statement of Commitment to the Environment, which the Executive team first adopted in 2010. The Climate Change Action Plan outlines the steps the banks will take over the next 3-year period to improve our climate outcomes, drive cultural change, engage our people and customers, enhance our climate change risk management framework, and report on our climate change performance. The bank supports the Paris Agreement objectives and the required transition to a low-carbon economy. We are firmly committed to playing our part in this transition. We will continue to work to build climate mitigation and adaptation into our business and also to assist our customers and their communities to build climate resilience into their futures. For the coming 3 years, your bank will concentrate on 4 focus areas of activity, which incorporate the direct and indirect environmental impacts the bank has through its operations. These are to reduce our footprint, support our customers to do the same, understand and manage the risks, and to be transparent. The bank will review the Climate Change Policy Statement annually and will continue to evolve its approach as science, technology and policy develops. Looking to our people, we continue to embrace a diverse and inclusive workforce, which is a core component of our organisation and critical in achieving our objective of creating a community where employees want to work, where they feel valued and experience a sense of belonging. In line with this commitment, in December 2019, we launched our first Access and Inclusion Plan in partnership with the Australian Network on Disability as part of our broader diversity and inclusion strategy. Like many barriers faced by everyday Australians, disability should never prevent anyone from seeking advice, accessing products and services, or building a meaningful career. For us, diversity is about more than gender, race, disability or sexual orientation. It includes age, people bringing diverse experiences, rural, regional and international perspectives, the geographic spread of our people, and people combining community commitments with their work. Our diversity and inclusion strategy also includes a commitment to flexibility, which has been tested like never before during this pandemic. Prior to March, just over 9% of our workforce had a formal flexible working arrangement in place. Since March, more than 90% of our corporate office staff have been working from home. This number fluctuates day by day, with some of our sites in New South Wales, South Australia and Queensland seeing staff returning to the office on a flexible basis. We encourage these staff to choose and find the right balance between maximising flexibility and productivity as we continue to navigate our way through this pandemic. In conclusion, I would like to thank all our Bendigo and Adelaide Bank people across the country who have worked tirelessly throughout this year, often in extremely difficult circumstances, from your homes, our offices, and especially to those in our branches directly supporting our more than 1.9 million customers. I am so proud of what you have achieved and how you have gone about representing the bank during this unusual year. I would also like to thank our customers, our community banks and our other key partners. You are all very important to our ongoing success. Finally, and most importantly, I sincerely thank you, our 110,000 shareholders, for your continuing and enduring support this year. It has been a privilege and an honour to lead Australia's better big bank over the past 12 months. We are grounded in more than 162 years of history, and I look forward to continuing to focus on helping deliver success for all our stakeholders going forward. Thank you.
Our business was formed more than 160 years ago with a simple purpose: to feed into people's prosperity by helping them realise their dream of owning a home. From these simple beginnings, we've grown into one of Australia's biggest businesses with a national presence. We're consistently ranked among the most trusted brands in Australia because we've never lost sight of our purpose: to feed into the prosperity of our customers and communities, not off it. But today, our customers don't only want to buy a home. Their needs are complex, and they look to us to provide simple, effective banking solutions. And we have a strong history of innovation that has enabled us to not just survive in changing times, but to thrive. In the 80s, we were the first bank in Australia to launch Visa debit cards. We were the first to market with a mortgage offset account, and in 1998, we established the community bank model, which remains a significant point of difference from the majors. We started the new millennium with the Ethical Investment Fund, Australia's first ethical bank deposit, and the Regional Development Fund, to attract superannuation back to regional investments. We introduced Australia's first green loan product in 2002, and in 2008 the Bendigo Centre opened, achieving regional Australia's first 5-star green rating. In 2014, we were recognised as one of Australia's most innovative companies by BRW magazine, an accolade further earned in 2018 when our customers were the first to enjoy access to Apple Pay, Samsung Pay, Google Pay, Fitbit Pay, Osco and PayID all together. And in 2019, we were the first lender in the world to offer a digital home loan application and assessment process. Among all these firsts, we have a long list of achievements in providing critical supports and services to improve the lives of people in every community in which we operate. We're proud of these achievements, many of which started with a simple, good idea. Today, we're facing into some significant headwinds, but our history of innovation, our drive to achieve, and our unwavering commitment to doing good will enable us to bring today's simple, good ideas to life and to achieve our vision to become Australia's bank of choice.
Good morning, everyone. I would also like to acknowledge the traditional owners of the lands on which we are collectively and virtually meeting today, including the Dja Dja Wurrung people of the Kulin Nation in which Bendigo is located. I recognise the traditional owners and their continuing connection to land, water and community, and I pay my respects to their elders, past, present and emerging. I also extend you a warm welcome to this, our first virtual AGM. I don't need to remind you that 2020 has been a year like no other. It has impacted us all in so many ways. Some say 2020 will be remembered for its challenges in dealing with what is known and braving the uncertainties of what is to come. However, I strongly believe it will also be remembered for how effectively people, communities, government and business have collaborated, responded and adapted to situations most had never ever contemplated. The unprecedented bushfire, flood, drought and pandemic events Australia has faced and continues to face have caused unparalleled social and economic upheaval, the full impacts of which are still largely unknown and changing. However, as Australians, we value compassion for those in need, and while these crises have and will continue to test our nation's resolve, it has been heartening to see the lengths we are prepared to take to support each other and the most vulnerable in our society. After all, without a sense of caring, there can be no sense of community. And through all of this, despite the disruption and change, who we are and what we stand for at Bendigo and Adelaide Bank has not wavered, and nor has our strategy. In 2019, we announced a multi-year transformation and growth strategy. A strategy focused on reducing complexity, investing in capability and telling our story to reshape our business for the future and deliver on our vision to be Australia's bank of choice. Australia's bank of choice for customers, communities, employees, partners and investors. A bank people are proud to do business with, partner with, work for and invest in. Whilst our full year result was impacted by COVID-19, record low interest rates and investment costs, the economic uncertainty has not changed our strategy. Instead, it has confirmed its strength and underpinned our need to accelerate the transformation of our business. We must continue to make the right decisions to ensure our organisation, your organisation, is the most efficient and profitable business it can be, whilst maintaining relevance to our customers and staying true to our long-standing purpose to feed into prosperity, not off it. Our responsibility to fairly balance outcomes for you, our shareholders, and all our stakeholders of our business is central to every decision we make. I would like to briefly acknowledge each of these stakeholders now. Firstly, we know that you, our shareholders, have been impacted in many ways in 2020 in terms of your investment in Bendigo and Adelaide Bank. I would like to extend my personal thanks for your patience as the board continues to prudently evaluate the decision on the final dividend in line with balancing shareholder and all stakeholder interests in the context of an ongoing environment of economic uncertainty. For our people, over 7,400 essential workers who have selflessly put aside their own personal circumstances this year has demanded an exceptional level of commitment and service to support our customers, their communities and the economy through the pandemic. Since mid-March, the vast majority of our corporate office employees have been working remotely. while the majority of our branch network has remained open to assist customers seeking a COVID-safe service. Our ability to move quickly to support our customers while also protecting our people's safety is a testament to our organisation's culture and capability. I'm extremely proud of how our entire team has adapted quickly and at scale to meet the challenges of this year, and I would like to thank each and every one of them for their efforts. And when it comes to our more than 1.9 million customers, this year has been one of significant change and challenge. Since March, more than 25,000 personal and commercial accounts have been provided with support to help manage the impacts of COVID-19. Whilst customers in some geographies and industries continue to face challenges, the number of customers on support packages has significantly reduced, including in Victoria. It is rewarding to see that our personalised support has enabled more than 2/3 of our customers on deferred repayment arrangements to get back on their feet. And we are further encouraged by the Victorian Premier's announcement to reopen Melbourne's retail and hospitality industries from tomorrow. The number of residential and consumer accounts on support packages is down 74% since the peak in May, and commercial accounts on support packages down 49% since the peak in July. We also take comfort our customer base is well positioned to manage through this uncertain environment, with 48% of customers more than 6 months ahead in their mortgage repayments, and almost 40% more than 1 year ahead. Naturally, it is in the best interests of both our customers and in turn the bank for customers to commence repaying their loans as soon as possible, and we remain committed to working with our customers to agree appropriate and tailored arrangements prior to their deferral period ending. We know it will take years for Australia and the world to fully recover, and we remain committed to supporting our customers, their businesses and the economy as it reopens and we all adapt to the new COVID normal. I would also like to take this opportunity to reaffirm our commitment to the communities we serve through the good and tougher times, as we have done for more than 162 years. Our bank and all our community partners have played and will continue to play a vital role in supporting the prosperity and livability of your communities, and we remain firmly committed to our profit with purpose philosophy. As one of the largest social enterprise movements globally, our community bank model has returned more than $250 million in community contributions since 1998. Which we estimate has in turn unlocked real economic and social benefits for these communities to the tune of $1 billion. In this financial year alone, the model has returned more than $21 million to local communities, helping to build much needed infrastructure and deliver important local sporting, education, arts and cultural initiatives. As well as a 1 in 100 year pandemic, this year Australia faced one of the worst bushfire seasons on record. In January, the bank launched its national and state-based appeals and raised more than $46 million from 145,000 generous donors to help those impacted by the devastating Black Summer bushfires. Importantly, 100% of the funds raised will be distributed directly to affected communities, with distribution decisions continuing to be informed and recommended by local communities. To date, almost half of these funds have been distributed to support these community-determined initiatives. I would now like to briefly comment on our business performance and outlook. Our distinctive strengths continue to provide shareholder value and opportunities. Last financial year, we saw solid performance across our main target markets, with our agribusiness division increasing lending 1.3% and maintaining a strong market share of 8.4%. Our small business proposition continuing to build on the momentum of the prior period. And of course, our residential lending growth through our combined third-party, direct and digital channels was a standout, growing at 4 times the average of the industry. Our branches in communities across Australia remain a critical part of our retail distribution strategy, providing a significant source of stable customer deposits and community connection. However, the size, look and feel of our branches has and will continue to evolve over time. This year we accelerated the modernisation and optimisation of the bank's physical distribution network with the opening of new community-focused experience stores in Carlton, Victoria and Leichhardt and Coffs Harbour in New South Wales. We further complemented this by growing our mobile relationship manager team by 30% to better support customers seeking a more convenient in-person banking experience. The success of our fintech partnerships continues. In 2018, in collaboration with Ferocia, we launched Up, the first mobile-only digital bank in Australia. It is now the country's highest rating banking application, and this year more than doubled its customer numbers to over 250,000. Our partner TikTok this year sustained further growth of 120%, with cumulative home loan approvals now at more than $1.2 billion. And both are finalists in this year's FinTech Australia Awards in multiple categories, with winners to be announced tomorrow night, so watch this space. Additionally, just 2 weeks ago we announced an exclusive partnership with Tyro, an ASX-listed payment solutions provider, for it to become the bank's exclusive merchant acquiring partner for our business banking customers. This agreement enhances our offering to our customers whilst also aligns strongly to the bank's strategy of investing in capability and reducing complexity. So these are just a few examples of what we've delivered in a year like no other. And so, despite all the change, we've pleasingly grown our customer numbers by 10%, with total customer numbers now at well over 1.9 million. We've maintained our market-leading trust, customer experience and NPS rankings, supported and continue to support our customers through the devastating impacts of this year's natural disasters and COVID-19. We've increased our lending to well above the industry average, and with this momentum continuing into this financial year. And we've further invested in new and existing partnerships. To achieve all this, though, requires investment. To continue to remain relevant, grow in a sustainable manner and provide appropriate returns to you, our shareholders, we must get our costs as a proportion of our income down. Our sights remain firmly fixed on achieving better outcomes for you and all our stakeholders through the new investments we're making, the capability we are building in our people and systems, and the continued focus we have on simplifying our business and carefully managing our costs. We are pleased with the positive progress made with our customers to transition them from repayment deferral arrangements and believe we are adequately provisioned for what we know today. Lending continues to be a strength, with year-to-date growth at 11% and residential lending at 16.1%, both well above industry levels, an outstanding outcome in a low-growth environment. Our net interest margin also improved in the first quarter, up 1 basis point on the second half of the 2020 financial year. Additionally, we have taken early and accelerated action to remove complexity and cost by increasing the intensity in our transformation program so as to return to target income growth exceeding cost growth this financial year. And whilst we know we have more work to do, we remain committed to achieving our targeted cost-to-income ratio towards 50% in the medium term. Our purpose, values, strategy and customer commitment will always be the lens through which we evaluate every single decision we make. And whilst we won't always get that right, it's the actions we take in response that underline who we are. Finally, and in closing, I would once again like to thank my team, the 7,400 staff Australia-wide who do an amazing job and go above and beyond to provide our customers with the best possible experience, even when their own circumstances are challenged by the current environment. The board for your ongoing guidance and support, every single customer for your advocacy and the opportunity you provide us to do business with you and support you and your communities, our partners and suppliers for the support, capability and knowledge you provide our business, and to you, our shareholders, for providing us with the capital to make it all happen. As Australia's 5th largest retail bank, one of Australia's oldest deposit-taking institutions and a top 100 ASX-listed company, we play an important role in providing responsible access to credit to fulfil the individual needs and circumstances of our customers and to support Australia's economy. Never has this been more important than now in our nation's COVID recovery. Thank you for your time today.
Thank you, Marnie. I would like to invite those eligible to ask questions to now do so through Lumi by using the speech bubble icon on your screen. We will answer any questions on the management of the bank or general questions now, and specific questions related to the items of business during the appropriate section. While these are coming through, I'd like to specifically address some questions that were submitted from shareholders prior to the meeting. Robert, could you please start with our pre-submitted questions?
Jackie, we received a number of questions and comments concerning the deferral of the full year dividend from shareholders from Cheltenham, Victoria, Karralee, Queensland and Forestfield, Western Australia. These included, will there be a dividend in 6 months' time? When will dividends be increased? And will the deferred dividend be paid to shareholders after they sell or transfer their shares?
Thank you for these questions, and I'm fully aware of how important the topic of dividends is to shareholders. We know you have also been impacted in various ways in 2020, and I would like to extend my personal thanks for your patience. I did address this in my opening speech, but I will reiterate that the decision to defer dividends was not taken lightly by your board. It was based on preserving capital in a time of economic and market uncertainty, and in consideration, of course, of both the short and the long term. As your board, we're also shareholders, and we were certainly happier with a 31 cent per share outcome in March than we were in having to defer the final year dividend. To be clear, as per standard practice, dividends will not apply to shareholders after they sell or transfer their shares. As I've previously said, and I am repeating myself, but it's an important topic, we will review our dividend situation in February next year, as we do every 6 months, and will inform the market promptly of our decision then. Next question, Robert.
We have a statement from a shareholder in Heathpool, South Australia, where he commented 30 board meetings per annum reads as if there are many issues.
That's a good pick-up. Thank you for that question. There are absolutely periods in a company's cycle whereby boards will meet more often than once a month, and this can happen for many reasons, certainly during key times where there are substantive strategic actions or times where there are unusual business circumstances, and I think the latter, which it clearly categorised what happened this year. As you would expect and as you should expect, the board were proactively supporting management during the COVID crisis this year, given its impact on the community, on our customers and the bank's people and its operations. We also had a capital raising and we changed our remuneration incentive scheme this year, both of which saw additional meetings. So thank you for that comment. Are there more questions, Robert?
Yes, Jackie. The next question is from a shareholder in Applecross, Western Australia. She asked, why are questions from shareholders limited to 250 words through the online registry portal facility? I find this very restrictive.
Thank you for your question. We are all learning in this online AGM format, so I do apologise if you found this a problem. We were aiming to ensure that there's ample time for all shareholders to be heard. And you were, of course, free to ask more than one question, and we haven't limited the number of questions in our meeting today, but we'll take this feedback on board for next time, if there is a next time in this same way. I will note that via the Lumi app, the questions that are coming in now have up to 1,000 characters, so hopefully that helps as well. But again, thank you for the feedback. Robert, next question.
The next pre-submitted question is from a shareholder in Chatsworth, Queensland, where he asked, I was just recently at the teller in the bank and found out that you have 4 different IT systems. Would it not be better just to have one? Would that not save costs?
Thank you for that question. I might take the opportunity to ask Vicki Carter, who's chair of our Board Technology Committee, to answer that one. Before I do, I would just say that your question is spot on, and the transformation that Marnie talked about in her speech covers exactly these types of issues. But Vicki, could I ask you to comment further here, please?
Certainly, and good morning, everyone. As Jackie has said, we do very much agree with this statement. We're currently taking some quite important decisions to make sure that we deliver on our strategy to reshape our business and for our vision for the future. And that, of course, does include a number of IT decisions that we're taking. Those decisions are very much informed by the principles of simplification and modernisation, so that we can continue to evolve our bank in line with the evolving needs of our customers and communities. There are a few really key reasons why that's important for us right now. Certainly, we're looking for additional efficiency and managing our cost base well. The regulatory requirements that we face as a bank are ongoing and many, and we need to be able to respond very well to those. And then finally, and very importantly, we are wanting to invest very deeply in capabilities that will continue to serve our customers' needs. And those capabilities are things like customer experience design, automation and digitisation to make the customer experience as seamless as it can possibly be. So doing all of those things will enable us to continue to deliver on our vision and to continue to feed very much into our customers and communities. Thank you, Jackie.
Thank you, Vicki. Next question, please, Robert.
We received a number of questions concerning plans to pay directors when the final dividend was deferred from shareholders in Girralang, ACT, and Canterbury and Warranora in New South Wales. These included, I respectfully disagree with your decision not to pay a token dividend and look after your older shareholders. I understand your fiduciary duties as board members, but this has not stopped you taking salaries and asking for MD reward issue of shares. With the poor performance of BOQ, how many of the senior executive and management and board are either taking a salary and remuneration cut, or how much will the board recommend and initiate, and how can you consider plans to reward directors when you are not paying dividends?
Thank you to the 3 shareholders for those questions. I know that shareholders across a number of companies are disappointed this year, but I'll assume the second question does relate to the Bendigo and Adelaide Bank. So as I've said, we do care deeply, and we are working hard to support all our stakeholders for the short and long term. I mentioned in my opening remarks that your board and managing director will take a pay reduction, and we are also all, of course, shareholders and therefore impacted as you are by the share price. Robert, do we have another question?
Yes, the next question comes in the form of a letter from a shareholder from Croydon, Victoria. The question relates to a consideration regarding a possible merger between Bendigo and Adelaide Bank and Bank of Queensland to then be possibly called Regional Bank of Australia.
Well, thank you very much to this shareholder for taking the time to write to us. I did actually very much enjoy reading your thoughts, so I appreciate that. The answer to your question, though, is, as we always say, we can't speculate and we don't comment on M&A activity. We will continue to focus on supporting our customers and their communities, as Marnie has outlined in her speech. Robert?
The next pre-submitted question is from a shareholder in Mowbray, Tasmania, where he asks, how will the company ensure that lending will be well regulated and does not target risky borrowers, considering the reduction in responsible lending obligation regulations by the government?
Thank you again for that question. I will ask our Chair of Board Credit Committee, David Foster, to answer that question in a minute, but I would simply say that our credit policies and limits remain in place and we will lend accordingly. But David, could I ask you to comment on this also?
Sure, thanks Jackie. Good morning everyone. The question relates to the potential changes to the National Consumer Credit Protection Act, and if passed by Parliament, these would take effect in around March next year. We, as all banks do, play an important role in providing responsible access credit to our customers according to their needs and circumstances, and it also plays an important role in growing the broader Australian economy. The objectives of these changes that are proposed are really aimed at improving efficiency and the processes to make it easier to support our customers accessing credit. And we see these both as positive and a welcome move to the policy and procedures. For banks, our existing lending guidelines are overseen by APRA and these will remain. And the government also plans to strengthen measures to protect consumers from predatory lending practices more broadly as well. And it's certainly not in ours or our customers' interest to lend them money that they cannot repay. We've got a number of things in place to support this, and our approach to lending involves us making inquiries about a customer's financial situation to ensure that they can meet their obligations under the loan contract, and including, and importantly, their ability to repay the loan. And we support this with a number of prudent lending criteria, which includes assessing serviceability under different interest rate conditions. We've got a number of policies and procedures which support compliance with our obligations under relevant legislation and the Banking Code of Conduct. And of course, on an ongoing basis, we provide tools, support materials and ongoing training. Thanks, Jackie.
Thank you, David. Robert, our next question, please.
The next question is from a shareholder in Lennar Valley, Tasmania, who asks, why has Bendigo Bank performed considerably worse than other banks in the sector, notwithstanding the impacts of COVID?
Thank you for that question. However, I'm not sure that is a fair categorisation. It's been a challenging year for Australia and the world. In fact, the share price of many companies has been affected and we're not immune to that. But our priority has been to support those impacted by COVID-19 and the natural disasters of last summer through a range of measures that we've implemented this year. It's important, and I think you would agree, hopefully, that healthy and supported customers are a long-term asset to any bank, and we are very focused on this. In addition to this support, and as I've mentioned before, and so I'm sorry to repeat myself a little bit, but we have a strong balance sheet which we've strengthened further this year via our capital raising in February. We paid 31 cents per share to our shareholders in March. We've had good success in growing above system levels in our consumer business. We've added close to 10% of new customers, and we've supported those in hardship via our COVID deferrals, and we've done all this whilst maintaining our market-leading customer trust levels. So there are many things to also be proud of this year, which I believe will serve us well in the future. Robert, do we have another question?
Yes, Jackie. This next question is from a shareholder in Camden, New South Wales, who asked, in what way has the COVID-19 pandemic, including the resulting closure of small businesses, affected the Bendigo Bank point of difference? That is, the physical presence of branches, in particular community bank branches.
Marnie, I might ask you to take this one.
Yeah, I'm happy to answer this, Jackie, and thank you. And, you know, it certainly has been a challenging year for, you know, individuals, all Australians, and including individuals and businesses right across Australia. And, you know, in relation to small businesses, they really are the engine room, you know, of the economy. And we know that some geographies and industries, you know, have been more impacted than others. However, we should never underestimate the resilience and the adaptability, you know, of Australians, and especially small businesses, who we've seen have innovated and adapted their businesses, whether that be their products and services or their distribution. And I think that holds those in good stead, you know, as the economy does reopen. As also mentioned in my speech that I was encouraged to hear the Victorian Premier announce yesterday the reopening of retail and hospitality in Melbourne. But COVID has reminded us of how important community is and buying local is. And we're a part of the community, our branches that are right across Australia, including our community bank branches, and we will be We will be there in those communities to support both individuals and businesses as the economy does reopen. Thanks, Jackie.
Thank you, Marnie. Robert, next question.
We have another question from the shareholder who asked an earlier question from Applecross, Western Australia, who said, I have attempted to open a term deposit in the name of my self-managed super fund twice in the past 2 years. Both times I was met with so much red tape I gave up. Why is this so?
I'm very sorry to hear that. Your experience doesn't sound like it met the commitment that we have to customer experience. So I thank you for that feedback. What I think is the best thing to do is we have your details, so we'll make sure someone contacts you directly after the AGM to discuss this further with you. Robert, do we have any more questions coming in today?
Yes, Jackie, we have a number of questions from shareholders. First question from shareholder Mr Craig Caulfield. Good morning, Chair. Last year I asked Bendigo to adopt model litigant principles so that a level of fairness is brought into customer disputes. Since then, all 4 major banks, 6 other financial institutions, including Bank of Queensland and Suncorp, have adopted model litigant principles, as well as Kiwi Bank in New Zealand. As of this morning, my search of the Bendigo website revealed no progress. Has Bendigo published model litigant principles? If not, why not?
Thank you for that question, Craig. Yes, we have. I think if you go to the search button on our website and just type in litigation, you'll find it directly. So I'm sorry you weren't able to, but it's definitely there. I've in the past looked for it myself and I can assure you it's there. Next question, Robert.
Another question from shareholder Mr Craig Caulfield. What does Bendigo see as the impact of repealing responsible lending laws regarding its approach to lending and its credit risk appetite?
Thank you, Craig. I might say that I think David Foster previously answered this question in relation to a previous question. So I thank you for your question, but I'm hoping that you got all the answers you needed from David's update earlier. So Robert, next question.
A question from shareholder Denmark Dream Proprietary Limited. Chair, in the governance statement re shareholders, it says the AGM provides an opportunity for shareholders to engage with us. We encourage shareholder participation. I also remind you and the board of Section 250S of the Corporations Act. Why don't you and the board take calls directly from shareholders instead of questions being triaged and read out by others? We're sure COVID doesn't travel along a telephone line.
Thank you very much to Denmark. Look, I'm not an expert on how COVID travels, but I can tell you that in terms of the technology to set up today, it has been a massive effort. We weren't able to have shareholders directly reading out their questions, but Robert, who is reading them out, is reading them out as accurately and as clearly as he can, based on exactly as they come in. So whilst they won't be your voice, they will certainly be your words. So Robert, next question.
Another question from shareholder Denmark Dream Proprietary Limited. Chair, the bank immediately freezes customers' accounts, including which hold critical daily funds, on a simple instruction in an external letter from a third party without checking the authenticity of the letter. Who has the authority in the bank, which manager or executive, to approve the freezing of customer accounts without any notice to the customer, leaving them in a dire position, and especially during COVID-19?
Thank you again to Denmark Dream Proprietary Limited. Marnie, I might ask you to comment on this one, please.
Yeah, thanks, Jackie. Look, I'm not across the specific details of the question that's been asked, because it does very much depend on the circumstances. But the bank will proactively look after the interests of its customers, and in a world where we're finding, especially a COVID time, increased scams occurring, and you'll see that right across the banking industry. We take that responsibility seriously to help to protect the funds of our customers, and so from time to time we will do that. We will always attempt to contact our customer before we actually do that, but it is a standard practice.
Thank you, Marnie. Robert, could I ask if there are any further questions?
Yes, Jackie. Question from shareholder Mr Milton Wild. Would Mrs Hay and Mrs Baker please explain how they will guarantee Bendigo shareholders' capital investments and dividends now that a growing group of bank customers remain unsatisfied in their written requests for copies of their mortgages and RMBS trusts and have reserved their right to commence action in the International Criminal Court?
Thank you, Mr Wild. It's a detailed question. I might ask Marnie to just make some brief comments.
And again, Mr Wild, we've been in constant dialogue with you in relation to this. It is a quite complex matter that you have raised here, and something that, like I said, we are working actively with you. Without being able to actually share those details more fully in a forum like this, which is not appropriate, we do provide information that is requested by our customers, and we will continue to do that, and we'll continue the conversations that we're having with you, Mr Wild.
Thank you, Robert. Thank you, Marnie. And Robert, next question, please.
A question from shareholder Mrs Patricia Sarah. Why have you used TikTok? Doesn't that have security issues?
Thank you very much for that question, Ms Sarah. I'll ask Marnie to comment, but TikTok is the name of an Adelaide-based fintech that we work with, not the global TikTok that most people would be aware of. So apologies for confusion there, but Marnie, maybe you could say a few words about the TikTok that we use, which is definitely not the one that gets a lot of global publicity.
Yeah, and just to expand on that, whilst we have a shareholding in that Adelaide-based company, it is not our company. And, you know, I do know and understand, though, that they have and continue to review that, given that there is another TikTok that is somewhere else in the world. They are very mindful of any contagion risk from that, but that is up to that company to make that decision.
And just to be clear, we offer the product under Bendigo Express. But thank you for the question. It is confusing, but definitely not the same TikTok as is getting global publicity. So Robert, next question, please.
We have a number of questions from shareholders in relation to the Climate Change Action Plan. Question from Mr Peter Yule. In June, the bank commenced a 3-year climate change action plan, pledging to understand and manage climate risks and to be transparent in doing so. Page 32 of the annual review promises to expand our climate-related to frameworks such as the Task Force on Climate-Related Financial Disclosures. The recommendations of the TCFD were published more than 3 years ago, attracting support from 1,440 organisations, representing a market capitalisation of $12.6 trillion, including our competitors such as ANZ, Commonwealth Bank, NAB, Westpac and Macquarie Bank, as well as major Australian insurers and super funds. When will Bendigo fully implement the TCFD recommendations?
Thank you very much, Mr Yule. I talked in my opening remarks about our activities in regards to climate change. We introduced a new and updated policy this year, and also I talked about an action plan covering a number of areas. One of those is, of course, covering the fact that we're undertaking scenario analysis in relation to climate change. I'm very keen that the company does that properly, so they will do that and they will disclose that in due course, and of course it will be in line with the Task Force on Climate-Related Financial Disclosures. So thank you very much for your question. Robert, next question please.
Yes, a related question from shareholder Ms Gillian King. I commend Ben's ongoing commitment to not lend to fossil fuel extraction such as coal and coal seam gas projects. It would be good to see that once again expressed as a blanket ban rather than the current commitment of only not lending to coal and coal seam gas. I also welcome the bank's effort to reduce damage to our climate, understand and manage climate-related risks facing the bank, and be transparent about its climate-related performance. I was particularly interested to see the board had oversight of the climate change strategy and that executives and senior leaders are accountable for its implementation, and that the bank will be joining the Task Force on Climate-Related Financial Disclosures. Consistent with the commitment to transparency, would you please tell us where can you see the climate change action strategy? And secondly, by when the bank is aiming to have zero net emissions of greenhouse gas emissions?
Thank you very much for that detailed question and for the feedback to us. I appreciate that very much. There was a lot in that. Our updated policy, which I think might be what you're referring to, is certainly available on our website, so I encourage you to access that. As I said in my opening remarks, we support the Paris Agreement objectives, and as I answered in relation to the previous question, we are undertaking scenario analysis and we will in due course make that available according to the TFCD recommendations. So thank you very much for that question. Robert, do we have any more questions?
Yes, another question from shareholder Mr Craig Caulfield. I attempted logging into Bendigo's AGM this morning using my HIN number that I use to access 6 other virtual AGMs. It failed. I tried 4 different formats, all failed. Boardroom confirmed a VAC code should have been sent to every shareholder. I said I did not receive either by email or post. Boardroom confirmed that it was not sent to me. Clearly many shareholders will be excluded given this critical oversight. Does Bendigo commit to holding physical AGMs despite industry lobbying to convert to virtual?
Thank you, Mr Caulfield, for another question, and I'm sorry to hear you had some problems getting in today. I'm obviously, given you're asking questions, I'm pleased to see that you have been able to join. I think I could speak on behalf of the board and say we enjoy very much the interaction with shareholders. It's an important part of our year to have a chance to meet shareholders directly in Bendigo and particularly to have a chance to interact and talk with them afterwards. We all enjoy that. Marnie, I know, does and meets up lots of people she knows, and I certainly do. So we look forward to getting back to face-to-face. This is an unusual year and we need to do it this way this year. Next question, Robert.
Yes, another question from shareholder Denmark Dream Proprietary Limited. Chair, due to expressed poor practices and conflicts of interest, there is currently an inquiry by the Parliamentary Joint Committee on Corporations and Financial Services Regulation of Auditing in Australia, including the top 4 auditors, which includes KPMG, Deloitte, PwC and Bendigo's auditor, EY. Would the board expect the bank to complete their own full investigations under authority of the Financial Crimes Unit, including AML, CTF and fraud, prior to proposing an external review?
I think the committee related to regulation of auditing in Australia needs to go through its process and make its comments. It's not for me to comment on that, but I do thank you again for the question. Robert, next question.
Yes, another question from proxy holder Alison Wirtz. At our AGM last year, Chairman Robert Johanson told shareholders that our bank had conducted scenario analysis on the impacts of climate change on the agriculture sector, but that the analysis isn't publicly available. Last summer, myself and so many Australians were devastated to see huge parts of regional and agricultural communities decimated by climate change-fuelled bushfires. Our industries need to understand the risk of climate change now. In contrast to Bendigo Bank, Commonwealth Bank has disclosed this kind of analysis, which found that the grains, livestock and dairy sectors face declines in productivity and profitability of 40 to 50% out to 2060 as a result of climate change impacts such as heat, stress and lack of water, unless mitigating steps are taken. Has Bendigo published its scenario analysis yet? If not, how are shareholders supposed to know whether our exposure to the agriculture sector is safe, and how will you support Australia's agricultural communities?
Thank you very much for that question, Ms Wirtz. It was devastating, that the impacts of last summer's climate activities, whether that was bushfires or droughts or anything in between. It was a devastating summer. So our hearts go out to all of them, and we have done a lot of work with our customers in supporting them through that. In terms of your comment about scenario analysis, I think I did cover that just a couple of questions ago, that we are working on that and we will certainly publish that according to the guidelines. So thank you. Robert, next question.
A similar question on climate change action from shareholder Mr Peter Yule. I note that Bendigo Bank has adopted targets covering its Scope 1, 2 and 3 greenhouse gas emissions. However, the bank has adopted targets to maintain the carbon intensity of its lending portfolio. If not, why not?
So in terms of our lending portfolio, again, I go back to my previous answer, which is we're working on the scenario analysis now, and it will be available in due course, and we're of course keen to provide that according to the TFCD recommendations and guidelines. So that will be coming. Thank you for your question. Robert, is there another question?
Question from shareholder Dr. Linda Newland. The directors all have a number of positions on a number of boards. It's true that there were many meetings, but how much time do they have for the Bendigo and Adelaide Bank board vis-a-vis other boards?
Thank you for that question, Dr. Newland. I can assure you that all directors are always available whenever I need them, and that's for both formal and pre-set meetings. It's also, as we've had this year, some unscheduled meetings, and quite a number of unscheduled meetings as we've needed to work through the issues of 2020. So whilst some of our directors do have multiple activities going on, I'm not concerned with their multiple activities so long as they're fully focused on the Bendigo Bank when we need them, and I can assure you that they have been. So thank you very much for your question. Robert, next question please, if there are any more.
A question from the Finance Sector Union. Throughout the COVID-19 pandemic, your staff in retail branches have served their communities and Bendigo and Adelaide Bank at great risk to themselves and their families. Your essential frontline staff have had to do their usual roles in helping customers while also having to police physical distancing and mask requirements, clean and sanitise the branch throughout the day, and assist people experiencing financial hardship and emotional distress. Your essential frontline staff requested a meeting with Richard Fennell to talk about their experiences during the pandemic, and he declined to meet with them. Can you explain how Bendigo and Adelaide Bank intends to recognise the important contribution your people have made during the COVID-19 pandemic?
Thank you very much to the Financial Services Union for that question. Our people have been magnificent during this pandemic. They have really represented the company and the bank very well in terms of difficult times that they've had to endure and difficult interactions that they've had to endure with customers. So I can't thank them enough. We have, as you would be aware, an enterprise agreement, and people will be, our staff on the enterprise agreement will be getting a 3% pay increase this year. We've also offered 10 days additional personal leave to people to help them through this difficult time. In terms of Richard Fennell, he meets with branch staff regularly. I would, on behalf of Marnie, say in terms of meeting with the FSU, we are also very happy to do that whenever is needed. Robert, next question please.
Another question from the Finance Sector Union. During the COVID-19 pandemic, levels of financial hardship in our community have increased. Your customer-facing staff have felt this acutely, having daily conversations with distressed people in very difficult situations. In this context, and following the Banking Royal Commission, why has Bendigo and Adelaide Bank continued to have performance targets for staff that require them to sell products and services to your customers? Why is Bendigo and Adelaide Bank focusing on sales and profit rather than on the well-being of its staff, customers and community?
With all due respect to the FSU, Bendigo Bank was one of the first, more than 10 years ago, to eliminate sales targets and commissions for our branch staff. So I'm sorry, but that's not a correct assumption, and we don't do that. Robert, next question.
A number of questions from shareholder Mr. Craig Caulfield. Bendigo writes about, and the Chair and CEO speak of, accountability and transparency. Too often Australians see companies fail to walk their talk, from Rio Tinto's Duke and Gorge explosion to the ASIC chairman's gouging his personal fees at taxpayers' expense. I again ask Bendigo to match NAB, CBA and Westpac in publishing their full APRA governance report, with appropriate names redacted if need be. If not, please explain to not just the Bendigo shareholders but the Australian community why you talk so much about the importance of accountability and transparency, but in reality conceal from the public this landmark document.
Thank you again, Mr. Caulfield, for your question. We have a number of interactions with APRA and discussions and report between ourselves. We use that extensively, and our conversations with them extensively, to ensure we're both doing the right thing and improving wherever possible. And those reports are for our own purposes and to make sure we improve and we get better all the time, which absolutely we are. So I thank you again for your question. Robert, is there any more questions?
Yes, Jackie. Another question from Mr. Craig Caulfield. Bendigo customers, just like other bank customers, often find making a complaint difficult to get to the right person and get shuffled around various case managers. Publishing a simplified, much simplified version of the bear map you have already created and provided to APRA would increase accountability and transparency. I experienced such issues across multiple requests to multiple people to obtain my documents from Bendigo. Why not publish this simplified version to make it easier for customers who experience this pass the parcel, as I also experienced at Macquarie Bank 31 times?
Thank you, Mr. Caulfield. All customer complaints that come in go to our customer advocate office, so it's very clear how it's handled in the bank. I'm sorry for your experience with Macquarie, but that's not for me to comment on. But certainly from our perspective, our customer advocate office is across all our customer complaints. Robert, next question, please.
A question from shareholder Denmark Dream Proprietary Limited. Chair, the Corporations Act states, Section 250S, questions and comments by members on company management at AGM. 1. The chair of an AGM must allow a reasonable opportunity for the members as a whole of the meeting to ask questions about or make comments on the management of the company. And 2. An offence based on subsection 1 is an offence of strict liability. Note, for strict liability, see section 6.1 of the Criminal Code.
Thank you again, Denmark Dream Proprietary Limited. I think I can assure you that all questions that came in advance have been answered and or will be answered as part of the relevant sections. And I can assure you that all questions that are coming in now, we're working our way through them, and you've had a number. And so you can see directly that we are taking all questions on board, and we are answering them. And we'll continue to do so until it gets to a point where we run out of questions or we run out of time. But as I said in the beginning, I will continue to continue to answer questions for as long as we practically can. So thank you. Robert, next question, please.
Another question from shareholder Denmark Dream Proprietary Limited. Chair, which board members have legal experience or a legal background?
Thank you again, Denmark Dream Proprietary Limited. All our board members in some way or another have vast experience in dealing with legal issues across their corporate or other careers. So we all are very familiar with legal issues. We are all very familiar with our legal responsibilities. So again, I thank you for your question and would say that pretty much all the board does have legal awareness, legal understanding and legal experience in some way, shape or form. Robert, do we have any more questions?
Yes, Jackie, a further question from Denmark Dream Proprietary Limited. Chair, my response to your address where you said when mistakes are made, you, Bendigo, take ownership and fix and remediate, this is misleading the public as there are many long-standing aggrieved customers, including myself, who have very serious complaints, including providing Bendigo the evidence, which are still outstanding. When will Bendigo fix and remediate these?
Again, thank you for your question. I think, as Marnie said, we can't talk about individual customer issues in a forum like this, but we do take your individual customer issues very seriously, and we have been working with you and others to work through these such issues. Robert, are there any further questions?
Yes, we have further questions from shareholder Mr. Craig Caulfield. Commissioner Haim recommended a national farm debt mediation rather than the hodgepodge of various state strategies. As Deputy Chair of the ABA, will you, Ms Baker, speed up creating this national farm debt mediation forum so farmers do not continue to be failed? As Australia's leading regional bank, with a substantial farm loan portfolio and Bendigo subsidiaries being exposed for serious failures at the Hain Royal Commission, can you say right now that 2 years has been too long to wait? Ms Baker, will you use your positions of power in the ABA to put the interests of farm customers first by pushing to have this National Farm Mediation Forum to be legislated within 90 days?
Marnie? Comments?
Thanks, Jackie. Yes, it is, it's very important that farmers do have that debt mediation support. We are one member of the Australian Bankers Association and trying to get in place a national debt scheme, as you would well understand, given the differences between the state-based, does take some time to do. So I am unable to commit to any timeframes in relation to that, except to say that, of course, it is very much front of mind and there is work going on, as we speak in relation to that.
Thank you, Marnie. Robert, any further questions?
Yes, question from shareholder Mr Craig Caulfield. Given the difficulties in shareholders accessing today's virtual AGM and in keeping with Bendigo's commitment to accountability and transparency, will you consider publishing a full transcript alongside the webcast in order to act in customer and shareholder interests?
Mr Caulfield, thank you. I think I've already apologised for you for difficulties you had getting in, but this is available streaming, it's available by phone, it's available in many different ways online, and we encourage and hope shareholders from far and wide have been able to join us today. So there's nothing to hide here. We're very welcoming and open to everyone joining, and there's nothing secret here because it's all very much a public forum. So thank you again for your question, but I think it's available far and wide. Robert, are there any other questions? And may I ask for other questions from perhaps shareholders who haven't had a chance to ask yet?
There are 3 remaining questions from shareholder Mr Craig Caulfield.
Are there any questions from other shareholders?
Not for the general questions section.
Let's continue. Thank you with Mr Caulfield's questions.
Mr Craig Caulfield, as a founder of the Bank Warriors and Special Advisor to Bank Reform Now, I have observed long-standing customer issues remaining on foot far too long across Bendigo and other banks. Our 16,000 members and followers inform us of bank behaviour. Many media reports have shown that bad news has not travelled in a fulsome way from the executives to boards. Banks were exposed at the Hayne Royal Commission, but more recently, Crown Casino failures were exposed by the Commissioner Burgeon at the New South Wales Casino Inquiry. Elon Musk of Tesla has found serious customer complaints the greatest mode of making positive changes to benefit the customers, shareholders and community. Chair, will you agree now to form a dedicated board customer committee, and if you already have this, agree that the board should meet long-standing serious legacy case customers to get a greater insight into failures with a view to reforming and improving processes from customers who have coalface experiences?
Thank you again, Mr Caulfield. Look, the board has actively considered your question around a board customer committee and have decided that it's very important that the board itself takes ownership of customer issues, and therefore every month when we meet we certainly go through customer issues that have been raised via various mechanisms, including via our Customer Advocate Office, of course. So I respect that some companies have decided to implement a specific committee, but for your board we have decided that this is something the whole board would like to be focused on and engaged in, so that's the way we're doing it. Robert, next question.
A question again from Mr Craig Caulfield. I raised recommending the banking and finance oath being adopted more widely at the 2019 AGM and in further meetings with Ms Baker. Given the banking and finance oath speaks to accepting responsibility and acting ethically to customers, why has Bendigo have one of the lowest take-ups of this ethics oath? 10 members from 7,000 employees is woeful. Bank of Queensland, in contrast, has today over 120 members, yet they have half the number of employees. Why does ethics rank so lowly in Bendigo?
Thank you for your question, Mr Caulfield, although I would hotly dispute your last statement. It does not, ethics do not rank lowly in Bendigo Bank. It's something we pride ourselves on. I'm surprised with that number given the number of people I know who are members of the Bendigo Bank and members of the Banking Finance Oath, so I will certainly look into that number. It doesn't align with my understanding, but I'll certainly look into it. Thank you for raising it. Next question, please.
A follow-up question has arrived, Jackie, from proxy holder Alison Wirtz. With regards to my question on disclosure scenario analysis of climate impacts on the agriculture sector, The answer given is that Bendigo is still working on that. However, as my question noted, shareholders were told last year by Chairman Robert Johansson that this scenario analysis had already been conducted. Has it been conducted or hasn't it been conducted, and can Bendigo please advise when that will be disclosed?
Thank you, Ms Wirtz. I think I have answered this, but let me answer it again. We are currently undertaking scenario analysis, and I am not asking the organisation to rush it. I'm asking them to do it properly. So it will be done properly and it will be disclosed in due course, and it is part of our climate action plan and the 4 areas that we're focusing on. One of them is absolutely this.
And another question from Mr. Anthony Fells. Anthony Fells here. I have just joined the meeting. Will I be able to speak to the meeting before the election of directors?
Thank you, Mr Fells. We will address how we're going to manage that when we get to that section, so I'll come back to your question when we get to that section, absolutely.
Jackie, a final question in the general question area has come through from shareholder Matthew Waterson. What is the future of the banking branch? With more customers looking to do their banking online, and now Bendigo is offering the online lending platform, will branches eventually be phased out and closed? Is there a possibility that some staff will be retrenched due to the decline in over-the-counter banking?
Thank you for that question, and it's a very important one. We have been a big supporter of face-to-face activities and branches. We are, as Marnie addressed in her opening remarks, focusing and investing in branches going forward. There will be decisions about branches also which will be done on a case-by-case basis, and that will be based on customer need. I think I should also note at this stage that during the COVID year that we've had, the Bendigo Bank kept the majority of its branches open during the year, and that was in contrast with some others. So I think that gives you an indication that we are strongly supportive of branches and of face-to-face communication. Robert, are there any other questions?
Yes, further questions are coming through. We have a question from Ms Gillian King. Because you don't seem to have received it, I'm resubmitting my follow-up to my earlier question. 1, I'm seeking the location of the climate change action strategy, not the policy. And 2, by when the bank is aiming to have zero net emissions of greenhouse gas emissions.
Ms King, thank you. I did think I answered that question before, but perhaps it was from someone else, so apologies if we've missed something. As I've said, we're working on our climate action plans at the moment. We will come in due course and publish more information on that, so I encourage you to watch out for that. We are working on it, and I do want to do it well, and I do want to do it properly. So, and when we do it, as I've said, we'll do it in relation to the task force on financial disclosure for climate change. So it's coming, and I thank you for your patience, but we will do it well, we will do it properly, and we will make it available. Are there any further questions, Robert? Or perhaps I could ask, are there any unique questions that haven't been already answered?
No, Jackie.
Thank you, Robert. We'll now move to the formal items of business as set out in the notice of meeting. So item number 1 is financial statements. This relates to the bank's financial report, director's report and independent auditor's report for the financial year ended 30th of June 2020. I'll ask our board audit chair, Rob Hubbard, to speak to this agenda item. Rob, over to you.
Thank you, Jackie, and good morning, everybody. I'm meeting with you today from the traditional lands of the Gubbi Gubbi people on the Sunshine Coast, and I pay my respects to elders past, present and emerging. The 2020 annual financial report was made available to shareholders in September. Our external auditors, Ernst & Young, have issued an unqualified opinion on that report. I note there's no requirement for a vote on this item of business. Ahead of the meeting, shareholders were provided with the opportunity to submit written questions to the auditor and the content of the auditor's report and the conduct of the audit of the annual financial report. I confirm there were no written questions received. However, Mr. Graham McKenzie from Ernst & Young is available today should there be any further questions. I now invite those eligible to ask questions or make comments on the 2020 annual financial report, or to put questions to the auditor. While these are coming through, I'd like to specifically address some questions that were submitted from shareholders prior to the meeting. I'll ask Robert to raise those questions. Thank you, Robert.
The first question is from a shareholder in Mowbray, Tasmania, where he has asked, the company provides extensive EPS values in its annual financial reports. Would the company consider also including net tangible assets or book value per share information in its reports? This would make it easier for long-term value investors.
Thank you, Robert. We do appreciate that all shareholders look at companies in a different way, and so we endeavour to provide as much information as possible to assist in your analysis of your company and the accounts. We do in fact provide the net tangible assets per share. It's in our 5-year summary, albeit I do acknowledge it's on page 127 of the annual report, and so it's a worthwhile read. We don't provide net assets per share. The major difference between the two is the goodwill that was represented on our balance sheet following the merger of Bendigo and Adelaide Bank. We do believe net tangible assets is a better measure, makes it more comparable with other companies, but we will have a look and see whether net assets per share will add value into the future. Thank you, Robert. Next question.
The second question is from a shareholder in Bolton Point, New South Wales, where he asked, with the market telling investors to sell, what can you do to achieve and move forward in the next 12 to 18 months to achieve better results?
Thanks, Robert. I think given this is a question really about the future, I'd like Marnie as Managing Director to answer this. So Marnie, could you say a few words, please?
Yeah, thanks, Rob. Like I said earlier in my speech, it really has been a challenging year, for all Australians and Australian businesses, including ourselves. But, I feel really encouraged in relation to what we are seeing. And, if we look at some of the statistics that I read out as part of my speech, the positive connotations, I suppose, that we are seeing sort of starting to flow through, and the additional business that we're seeing. So I did refer to the fact that we are growing well and truly above system. That has continued into the first quarter of this current financial year that we're in. Our net interest margin has held up over that time, in fact increasing an additional basis point since the second half of the last financial year. We are very, very focused on the costs within our business and ensuring that we are running as efficiently as we can. And, and I'm also really encouraged and very pleased to see the numbers of customers who have transitioned and are transitioning from the deferral repayment arrangements now being back to fully paying their loans. So I think there's a lot to be positive about going forward, and I think all shareholders should be encouraged by those signs that we're actually seeing. So I'm looking forward to being able to sit in front of you again in 12 months' time, and to the market in between times to provide you an update on the positive aspects of the business that we are seeing now playing out. Thanks, Robert.
Thank you, Marnie. Robert, that brings to an end the pre-submitted questions. Are there any further questions that have been submitted during the meeting?
Yes, there are, Rob. Question from the Australian Shareholders Association, from Eric Pascoe, Company Monitor for the ASA. Bendigo and Adelaide Bank rightly is very proud of its contribution to the community over many years. However, has the board contemplated the damage that has been done in the community due to the wealth destruction suffered on Ben's shareholders over the last 12 months? The loss in shareholders' value of almost $2 billion makes trivial any contribution from the bank to the community. Your shareholders are hurting. Will the board give a firm undertaking to shareholders that all future expenditure of significance will be undertaken only if it passes rigorous examination against robust return on investment criteria? Will the board make achieving a satisfactory total return to shareholders its major focus in financial year 21 and beyond?
Thank you, Robert. And as I think Jackie well articulated in her address and then in response to questions, the reduction in shareholder value and the cessation of, or the deferral of the dividend were not issues that were taken lightly, and they're not issues to which we're not responding. I think the question, though, is drawing a parallel between the community contributions that are made substantially by our community bank network and was at the foundational levels of how the community bank network were established, which are substantial and we're rightly proud of, but are a business value. This is not charity. This is instrumental to the community spirit that's generated by that network, and hence has great business value. To your broader question, is expenditure rigorously reviewed and is capital investment rigorously reviewed to ensure it has appropriate returns on investment? Yes, it is. We have an ambition to increase shareholder value, but we do that within the needs of all stakeholders. And this year, the prominence of our employees, our customers, is probably a little greater than our shareholders, but we view you all equally in terms of your importance to the success of the bank. Thank you, Robert.
A question from shareholder Denmark Dream Proprietary Limited, who has identified herself as Rita. Chair, remediation costs were 7.4 million in financial year 19, 16.7 million, and financial year 18, $500,000. These relate to products not operating in accordance with terms and conditions or not in compliance with the Code of Banking Practice 2013. The group made $6.7 million of remediation to customers. The cost-to-income ratio increased to 62.7% from financial year 19's 59.2%. Remediation appears very low given many long-standing aggrieved customers and Bendigo's shortcomings exposed in the last 12 months. Can you confirm these figures are true and correct?
Thank you, Rita, for your question. If they're the figures that you've extracted from the financial statements, then I can surely confirm that they're true and correct. I think the important thing is to look at the nature of the remediation. The major remediation costs that we incurred was in relation to a complex product that we introduced and was well received by its customers, but we would openly admit our systems and processes did not fulfil on the promise of that product. We undertook the work to identify what was wrong with that, and I think subsequent to June 20, substantially have made the remediation payments. Relative to other organisations, and I'm not holding this up as a standard, but relative to other organisations, our remediation expenses have been relatively minor. Thank you, Rita. Robert, next question, please.
Yes, further question from shareholder Rita. Chair, I commend Bendigo for including non-financial risks in their annual reporting, unlike last year. The group's identified non-financial risks includes, amongst other things, operational risk, which an event may also result in an adverse outcome for customers that the group would need to remediate. These events could require the group to incur significant remediation costs, which may include compensation payments to customers, legal fees and costs associated with correcting the underlying issue.
We do disclose that as an operational risk. It would be silly of us not to do that in relation to items that we have incurred over the last 2 years. But I don't think that should be interpreted as a tolerance by the board or either the management team that these things are acceptable. We're just making it clear to shareholders that the regulatory environment that we now live in is more complex, and we have products, we have customers who've been with us with the same product for 25 years, for example, and there is some risk, but we manage that risk as effectively as we can. We manage it on a daily basis through our operational risk management teams, and consequently, the level of remediation and compensation we've had to pay is relatively low. Thank you, Rita, for that question. Robert, is there another question?
Yes, a further question from Rita. The financial report under financial crime risk within non-financial risks states the group is exposed to the risk of financial crime, including both internal and external fraud, with the ability for employees and external parties to obtain advantage for themselves or others. It states we have established robust techniques and capabilities to detect and prevent fraud and comply with legislation. As Chair, do you and the Board directly receive the Financial Crimes Unit's investigation reports?
Thank you, Rita, for that question. When you say as chair, I presume you mean as chair of the Audit Committee. The Audit Committee and the Risk Committee do receive those reports, and the board also receives those reports. But I'm pleased that you've raised the question of financial crime risk, because it's worthwhile talking about the level of financial crime risk that a bank is exposed to, and Bendigo is not exempt to that, because it comes from high-level cyber threats and cyber attacks, phishing attacks, fraudulent applications, all the way down to someone turning up at a branch with their elderly parent and looking to remove money from their bank account. So we have a sophisticated financial crimes unit that manages it from the cyber end all the way through to our people at the branch who are looking after the interest of that person who may not have a relative who's as nice as you would like them to be. It's a constant battle, and we need to resource into that battle, and we've resourced very effectively in our view. Thank you, Robert. Next question, please.
A further question from Rita. Chair, Bendigo's reporting documents state each employee and director is accountable for their actions and required to comply with laws and policies of the group, including the Code of Conduct. Have there been any breaches in the last 12 months? If so, how many and in which areas of the business?
Look, the level of thank you, Robert, and thank you, Rita, for that question. And we do state that, and that is in fact true. We have very low tolerance for breaches of our Code of Conduct, and even lower tolerances for breaches of the law. There will have been some breaches of our Code of Conduct, and we will have dealt with those appropriately. Sometimes those punishments will be dismissal, and as you probably know, there is now a record of people from within the industry that is maintained should they look for a job elsewhere in the industry that will be apparent to that future employee. Other times it may be a formal warning, depending on the nature of the event and their degree of responsibility. I can't give you a precise number. I don't have that in front of me, but I can assure you the management action and the board action is to ensure that we not only comply with our Code of Conduct, but we also comply with the law at all times. Thank you, Robert.
A question from shareholder Mr. Craig Caulfield. The issue of fraud in loan applications is widespread. As auditor, what investigation do you take specifically in abducting customer loan application documents? Documents inside Bendigo, documents provided by brokers. I'm not requesting generic auditing, except what auditing specifically focuses on fraud in loan applications.
Thank you, Craig. As I spoke earlier, the level of fraud is an ongoing challenge for all banks, and so Bendigo is not immune from that. I think this question is specifically for the auditor, but before I ask Graham McKenzie to make a few comments on the approach of the auditor to fraud, it is the company's prime responsibility to deal with that specific issue, as it is to deal with elder abuse fraud, as it is to deal with phishing, and as it is to deal with cyber threats. The first thing we do in relation to loan application fraud is, be it through the third-party channel or be it direct, is we make sure we pick the right partners through the third-party channel. You pick people who have similar values and similar approaches and similar sophistications to ensure that you're approaching customers with a like approach. Directly, though, where individuals are prepared to commit fraud on a loan application, you need relatively sophisticated processes and systems to identify that. There is a link here to responsible lending, as David was saying earlier. Information is needed. Verification needs to take place. And on the one hand, some people may complain about the time that takes, but it's a necessary part of what any bank does. It's unfortunate, but borrowers do commit fraud and other people do commit fraud. It's our responsibility to have in place processes that will identify that, because that is shareholders' money that's being defrauded. But Graham, would you like to talk from an audit perspective on any work that you do in the context of the scope of audit you have on the financial report? Thank you.
Yeah, sure, Rob. And thanks very much for the question, Mr. Caulfield. Look, as Robert said, fraud is a tricky area, but it's one that we're very conscious of in relation to designing our audit procedures, perhaps specifically in relation to the query that you have. Some of the key testing that we do sample testing to verify the transactions and the documentation for a loan application. And that is regardless of whether that application comes via the banking network, so the branch network, or via a broker. We also test subsequent cash receipts of particular loans to ensure that once the loan is issued, that the funds are actually starting to be repaid. We've also, for the last number of years, been performing confirmations of outstanding loans with customers on a sample basis at 30th of June. I know for a number of customers that can be a strange process, receiving a letter from the auditor, but we have executed that, and I think that gives us, again, sort of further support. And the final thing I'd say in relation to this particular topic, which is an important topic, is that we work along closely with the bank's internal audit team. They do rolling collateral reviews, and we look at the testing and the results of those collateral reviews to ensure that there is support behind any loan application. So I think they're probably, that's at a fairly high level, Robert, but they're probably some of the key testing procedures that we do undertake.
Thank you, Graham, for that. Robert, are there any more questions?
Yes, a final question from Rita. Chair, under gifts and hospitality in the bank's reporting documents, it says we may only accept and give token gifts and modest hospitality and professional courtesies. We must not accept or give a gift or courtesy that could either lead to or be seen to lead to a conflict of interest such that our judgment is prejudiced or improperly influenced. Have any reports of conflict of interest been reported in the last 12 months?
Thank you for that question, Rita. Sometimes I'm accused of being too long in my answers, but this is a simple one. No, and it's not an issue within Bendigo Bank. Thank you. Robert, are there any more questions?
There are no further questions, Rob.
Thank you very much, Robert. I'll now pass back to Jackie as chair of the meeting to go on to the next item of business. Thank you.
Thank you, Rob. We'll now proceed to the items of business requiring voting by shareholders. I declare voting is now open on all items of business. The voting icon will soon appear on your screen if you are eligible to vote. Please submit your votes at any time during the meeting. As detailed in the notice of meeting, voting is restricted to the number of shares each security holder holds and is also subject to any applicable voting exclusions. To assist with the voting, Mr. Colin Fawns from Boardroom, our share registry service provider, is acting as returning officer for this meeting. The next three items of business relate to the re-election or election of directors. Usually at this point, we would hear from each of our directors standing for re-election. This year, we received an external nomination by Mr. Anthony Fells. In fairness to Mr. Fells, in place of our directors speaking to their nomination, a brief overview of each person will be read out. As the first item of business relates to my re-election, I will hand over the chair of the AGM to Tony Robinson, who is chair of our Board Governance and HR Committee. And Tony, I'd ask you to take this item, please.
Thank you, Jackie. Item 2 on today's agenda is for shareholders to consider, and if thought fit, to pass as an ordinary resolution that Ms. Jackie Hay be re-elected as a director of the bank. Jackie was appointed as an independent non-executive director of the bank in July 2011. She was appointed to the chair of the board in October last year. Jackie has a significant experience in information technology, telecommunications, finance, risk management and marketing from her previous leadership roles with Ericsson, including as CEO and Managing Director in the UK and Ireland and in Australia and New Zealand. Jackie is currently a non-executive director of Qantas Airlines Limited and AGL Energy Limited, both of which are ASX listed, and a non-executive director of Cricket Australia. She's a member of the board's Governance and HR Committee and the Technology Committee. Her extensive experience brings valuable skills and insights to the board and to her role as chair. With Jackie abstaining, I can confirm that the board unanimously recommends that shareholders vote in favour of Jackie's re-election. The direct voting and proxy details received prior to the meeting are now being displayed for your information. For those listening by telephone, the direct votes and proxies received as at the pre-voting cut-off time are 94.44% in favour of the resolution, 0.79 of 1% against the resolution and 0.77% open votes. We've not received any questions on this item ahead of the meeting, so we'll go straight to questions coming in through Lumi. Robert, can you please read any questions?
Tony, there are no questions in relation to this matter.
That makes that very easy. I'll therefore hand back to Jackie as Chair of the AGM. Thank you.
Thank you very much, Tony. Appreciate that very much. On today's agenda, we now consider the second item, which is to shareholders to consider and, if thought fit, to pass as an ordinary resolution that Mr Jim Hazel be re-elected as a Director of the Bank. Jim was appointed as an independent non-executive Director of the Bank in March 2010. Before joining the board, Jim had an extensive career in banking, finance and risk management, including in the regional banking industry, and this broad experience is of ongoing benefit to the bank. Jim currently serves as Director and Chairman of ASX-listed company Ingenia Communities Group Limited and is a Non-Executive Director of Adelaide Football Club Limited and Cooper's Brewery Limited. He's also Chairman of the Adelaide Festival Centre Trust and the Pro-Chancellor of the University of South Australia. Jim is a member of both the Board Credit and the Board Risk Committee. With Jim abstaining, I can confirm that the Board unanimously recommends that shareholders vote in favour of Jim's re-election. The direct voting and proxy details received prior to the meeting are now being displayed for your information. For those listening by telephone, the direct votes and proxies received as at the pre-voting cut-off time are 94.54% in favour of the resolution, 1.53% against the resolution and 3.93% open votes. Robert, have we received some questions in advance?
Yes, Jackie, the pre-submitted questions are from a shareholder in Heathpool, South Australia, where he asked, re-election of Jim Hazel as a director. 3 directors have had terms of more than 10 years. Is this appropriate? And a comment was also given by a shareholder in Mentone, Victoria, stating that the company needs some new blood.
Thank you for both those questions. As I noted in my opening speech and remarks, diversity in all its forms is very healthy, and it's very healthy for good decision making. We have 2 directors who have been on the board for 2 years or less. We have 3 who are just on 10 years or just over, and we have 3 directors who have varying lengths of service between 2 and 10 years. It does help to have some fresh and new eyes on the board, and that's why we continue to recruit and refresh the board. But it also helps to have some who have been here through various economic cycles and who can use that experience to the benefit of the company. And I can absolutely assure you that Jim does that extremely well for your board. Robert, are there any more questions coming through on Lumi? If so, could you please read these out?
No, Jackie, there are no further questions on this matter.
Thank you. If there are no further questions, I'll then move on to item number 4, which is the election of Mr Anthony Fells as a director. Item 4 on today's agenda is for shareholders to consider and, if thought fit, to pass as an ordinary resolution that Mr Anthony Fells be elected as a director of the board. Mr Fells is not presently a director of the bank and has offered himself for election as a director. Mr Fells provided a statement himself for his election, which was included in the notice of the meeting. I will read that statement now. Anthony has worked in commercial and rural lending and credit management with the Primary Industry Bank of Australia, PIBA, prior to its acquisition by Rabobank. He has a strong rural background gained from a lifetime involvement with farming, wheat, barley, canola, oats, lupins, cattle, sheep and pigs. He has also owned a large rural vet practice and animal supplier servicing intensive livestock producers and exporters throughout Australia. He was elected to the Western Australian State Parliament for the Liberal Party on his 3rd attempt in 2005, when he was appointed Shadow Minister for Consumer Affairs and later Regional Development, before resigning to become an independent. He served as an opposition MP under WA Premiers Jeff Gallop, Alan Carpenter, 4 Liberal opposition leaders and finally Premier Colin Barnett. He has exceptional experience in consumer affairs, audits and financial estimates committees. He has been a good customer of Rural Bank since 2006. However, he intends to immediately refinance this loan when he is elected to the board. He is also chairman of Helping All Little Ones Incorporated, Hello, a registered children's charity which he established in 1997. As stated in the notice of meeting, the board recommends that shareholders vote against Mr Fell's election. The decision of the board was made following a thorough due diligence process where Mr Fell's skills, knowledge, experience and attributes were assessed against the bank's policies. Members of the board also met with Mr Fells by telephone to further inform themselves of his suitability to hold a position on the bank's board and to inform themselves of the size of the contribution and depth of experience Mr Fells would bring to the board. Consequently, the board formed the view that the board is of an appropriate size to enable it to discharge its duties effectively, and as such there is no need to add further directors to the board. Also, Mr Fell's skills, experience, knowledge and attributes are adequately represented collectively by directors on the board, and the two directors standing for re-election at the AGM bring the desired skills, experience, knowledge, attributes and cultural traits needed ahead of that offered by Mr Fells. The direct voting and proxy details received prior to the meeting are now being displayed for your information. For those listening by telephone, the direct votes and proxies received as at the pre-voting cut-off time are 3.7% in favour of the resolution, 92.22% against and 4.08% open votes. Robert, I believe we received some pre-submitted questions. Could you please read them out now?
Yes, Jackie, there were two similar questions from shareholders, one in Karoi, Queensland, and the second in Kelmscott, Western Australia, who asked, who is Mr Anthony Fells and why is he not endorsed by the board? Why is the board against the appointment of Anthony Fells to the board as a director?
Thank you for those two questions. I believe this should now have been answered by my earlier statements. And by the statement I read on behalf of Mr Fells that he provided to the notice of meeting. I would also add that the normal governance process by which we assess potential new directors involves identification first of the required skills and attributes needed by the company, followed then by an Australia-wide search to ensure all possible candidates are considered and the best candidate is then selected using both internal and external guidance and input. We do follow this process every time and we plan to continue to follow this best practice governance process in selecting future directors for your company. Robert, I'll now ask, are there any questions coming through Lumi? And if so, could you please read them now?
No, Jackie, there are no further questions in relation to this matter.
Thank you. So we'll now move on to items 5, 6 and 7. I'd like to reintroduce Tony Robinson as Chair of the Governance and HR Committee, and Tony will take the next couple of sections with you.
Thank you, Jackie. As Jackie has outlined, it's been a challenging year and, as you'd expect, it has impacted the remuneration of our executives and other staff. But possibly more importantly, it's caused us to revisit the structure of executive remuneration to help ensure alignment to the key activities that we're undertaking to respond to those challenges and to ensure we deliver the best possible outcomes for shareholders. During the 2020 financial year, our executives did not receive a pay increase and no cash incentives were paid to executives or staff for the financial year 2020 performance year. The long-term incentive grants made to management in 2017 was tested post 30th of June 2020. The grant consisted of two tranches. The first tranche, which was measured against relative total shareholder return, did not vest. The second tranche, which had a customer hurdle based on relative net promoter score, did vest. This reflects the banks has continued to build our customer advocacy advantage over our peers. During the year, we conducted a comprehensive review of our approach to executive remuneration. Working with an external advisor to considered the effectiveness of the current arrangements, how best to support our strategic and cultural ambitions and the evolving regulatory requirements. In reviewing the executive remuneration framework, the key objectives were threefold. The first was to closely align the framework with the bank's strategic imperatives to drive performance in areas that would create sustainable long-term shareholder value. The bank has a significant transformation agenda that will require the bank to reduce its cost base, while continuing to grow market share and maintain our customer advocacy advantage. The second objective was to create a framework that supports the bank's culture of sharing in collective success, where outcomes under the new framework are directly linked with the shareholder experience, so that executives are encouraged to think and act like owners. And finally, the third objective was to address evolving regulatory change to support the bank's existing strong risk culture and provide for longer deferrals and clawbacks in line with the banking executive accountability regime and APRA's evolving requirements. The key changes from the review involve combining fixed pay and deferred base pay, noting that we had not done this for the Managing Director at this time due to her initial grant of deferred base pay being for 4 years. Other changes included removing the short-term incentive plan, retaining a portion of the historic long-term incentive plan as it relates to performance rights associated with the achievement of relative total shareholder return, and finally, eliminating a portion of the historic long-term incentive plan and the creation of a new element of the long-term incentive plan being a loan-funded share plan. This framework is consistent with the bank's long-held view that remuneration structures which are weighted towards short-term and individually focused performance are incompatible with the bank's strategy and risk poor culture and behaviour. By removing the cash short-term incentive, the new executive framework is focused on long-term sustainable shareholder returns. Under the loan-funded share plan, participants are provided a non-recourse interest-free loan, but repayable from the bank for the sole purpose of acquiring shares in the bank. Any dividends paid on the shares, while the shares are restricted, are applied on a notional after-tax basis towards repaying that loan. The balance of the dividend or distribution is paid directly to participants to fund their tax liability on the dividend received. This structure has similarities to an option plan in that most of the value to an executive is a product of the difference between the share price at grant date and the share price at vesting date. Shares allocated under the loan-funded share plan are subject to a 4-year vesting period and the satisfaction of the following conditions. At the end of the initial 2 years, the performance conditions are tested. After testing, the shares remain restricted until the end of the 4-year period and are subject to an assessment against an overall risk gateway at the end of the 4-year period before vesting. Participants must remain employed with the group for the duration of the 4-year period. The selected performance conditions aligned with our strategy are the need to reduce cost, measured through our cost-to-income ratio, continuing to grow our market share, and maintaining our customer advocacy advantage over our peers. I will discuss these in a little more detail when we get to the resolution on Marnie Baker's grant. The intention of the transition approach to the new framework, there be no material change in the executive's overall incentive opportunity. The value of the loan-funded share plan grants has been based on the prior year's short-term incentive opportunity and 50% of the prior year's long-term incentive grant size. A multiple is then applied to this value to determine the grant value or loan value. The reason why a multiple is applied is because the loan-funded share plan value is derived largely from share price growth. This contrasts with performance rights, which have value as long as the vesting hurdles are reached. In determining the multiple, the board considered market practice and an indicative fair value calculation of the loan share plan. The other part of the long-term incentives are performance right grants linked to a 4-year relative total shareholder return. These performance rights only vest if the bank's total shareholder return is above the median of the peer group over the 4-year period, again creating strong alignment with shareholders. These performance rights are consistent with part of the previous long-term incentive plan, and the value of these grants are approximately 50% of the prior year's grants. In addition to the introduction of a new executive remuneration framework, the board chair fee has been reduced by 5% from the start of this financial year, and directors' fees otherwise have remained unchanged except for a 6-month step down of 10% for all board members, which will occur effective from the 1st of November 2020. This followed a review of directors' fees conducted during financial year 2020. The board has also introduced minimum shareholding requirements for directors and executives, which came into effect in financial year 2021. So that's the background. I'm going to now move to the formal resolution as set out in item 5 of today's agenda. Shareholders are asked to consider, and if thought fit, to pass the resolution to adopt the remuneration report for the bank as set out in the annual financial report for the financial year ended 30th of June 2020. I can confirm that while each of our directors has a personal interest in this resolution, the board unanimously recommends that shareholders vote in favour of it. As you know, the votes on the remuneration report is advisory only and does not bind the company or the board. However, the board will take the outcome of today's vote into consideration when reviewing the remuneration practices and policies of the bank. The direct voting and proxy details received prior to the meeting are now being displayed for your information. For those listening by telephone, the direct votes and proxies received as at the pre-voting cut-off time are 91.61% in favour of the resolution, 0.5% against the resolution and 0.89% open votes. I now invite questions from shareholders. Robert, would you please read out some of the questions that were submitted by shareholders prior to the meeting?
Tony, I'm sorry to interrupt, but could I just read, there was a bit of a typo there. So the number of votes for the REM report was 91.61%, against was 4.50% and open was 3.89%.
Well, that's the challenge with the teleprompter, isn't it?
So, back to you, Tony.
Thank you very much for that correction. And I think obviously the substance is the same, that it's a report overwhelmingly supported by shareholders, and we thank you for that support. So, Robert.
Yes, Tony, thank you. There's first question is from a shareholder in Bendigo, Victoria, who asked, has the CEO and board taken a reduced remuneration due to no dividend payment? If not, why not?
Thank you for that question. And I think that question's been answered now. Robert, let's move on. And is there another question?
Yes, Tony. The second question is from a shareholder in Wattle Grove, New South Wales, who asked, can the board tell me why the remuneration gap continues to widen between senior executives, board members and the rest of your staff?
I'm going to ask Jackie to answer this one. Jackie.
Yes, thank you very much, Tony. Look, in answer to this question, as I've covered previously, the bank's, or maybe I haven't covered previously, but I should now, the bank's board has not had a fee increase since 2018 and the MD has not had a fee increase since that time either. The executive also didn't have a fixed salary increase this year. Our enterprise agreement of staff, as I did mention earlier, have received a 3% salary increase this year. So the gap is not in fact widening at all. I would also add that our external benchmarking shows our total executive remuneration expenses remain modest relative to other listed financial services entities. So I hope that answers the question. Tony?
Thank you, Jackie. Robert, any other questions?
Yes, Tony. The last pre-submitted question is from a shareholder in Bel Air, South Australia, who asked, why are items 5 and 6 being considered when a decision regarding dividends for ordinary shareholders has been deferred?
In answer to this question, I believe we've adequately addressed our prudent decision to defer the dividend and also the reasons behind our proposed remuneration structure. We'll address them further in item 6 shortly. So, Robert, if that's the last of the ones received prior, let's move to those received via Lumi. Are there any?
Yes, Tony. So the first question is from the Australian Shareholders Association, from Eric Pascoe, Company Monitor for the ASA. 2 years ago, the ASA praised the Bendigo and Adelaide Bank's new CEO's package for its simplicity, clarity and reasonableness. The changes announced this year are unnecessarily complex and render the package almost impossible to evaluate and quantify. The ASA is supporting the remuneration report purely because it is well intentioned and does not appear to be excessive. However, we feel the changes are convoluted and reflect poorly on the company.
Well, obviously we're always disappointed to get those sorts of comments. We think that the new structure achieves what it sets out to, and when we've talked to the proxy advisors, they've supported that view. The idea is to create a structure that increases the alignment with shareholders. So we've removed the short-term incentive for the reasons we've explained and weighted it more to a long-term or a medium-term incentive. And that's based largely, the value of it anyway, the hurdles to get it are the ones we talked about, the key drivers of shareholder value being cost to income ratio, market growth, and the maintenance of one of our key differentiators, which we measure by relative net promoter score. But the value of it is going to be determined by the difference between the share price at the date of the grant of the loans and the shares and the date that they vest. So it's a relatively simple structure in concept and very heavily weighted towards aligning the executives with the outcomes shareholders will receive over the duration of each of the terms of the of the grants. I'm not sure I can add a lot more to that. Robert, any other question?
Yes, Tony, a question from Rita. Chair, long-term incentive grants made to key management personnel, including the Managing Director in financial year 2018, did not vest. The bank states it continues to build customer advocacy advantage over peers, which resulted in performance rights with a customer hurdle vesting. This is not based on direct performance, including the Managing Director. With impacts of COVID-19 and the shortcomings of the bank, could you please explain how the board and Bendigo justifies any such entitlements to be paid and without any adjustment?
Thank you, Rita, for the question. And I should also have finished the last piece by thanking the Australian Shareholders Association for the support. That's particularly true given you had some questions or concerns about it. So, Rita, the answer is that a net promoter score, as I said, the three of the really important drivers of value for shareholders are the cost to income ratio, the growth and the net promoter score and the relative net promoter score. And we continue to maintain that advantage because it's not just net promoter score, it's the net promoter score relative to the major banks' net promoter score, the average of that. And we've continued to maintain that. That's not easy to do. It's something that all parts of the bank work to do, and the fact that they've achieved that entitles them to have the portion of the long-term incentive plan associated with that vest to them, and that's what's happened. I hope that answers the question. Robert, any other questions?
Yes, Tony, a question from Mr. Craig Caulfield. Bendigo highlights their high net promoter score relative to other banks. NPS is flawed given it is at a point in time of a transaction or service taking place. Serious and long-standing disputants are not polled so that the long-term customer satisfaction is excluded. Will Bendigo engage with bank warriors and Bank Reform Now to adopt a range of other metrics to provide a more balanced and accurate view?
We obviously spent a lot of time thinking about this through this review process, and the answer is that net promoter score does have flaws, and that's why we actually picked relative net promoter score. One of the challenges in finding metrics is both to make them meaningful and to allow them to be independently verified. So looking for other measures where people are able to provide you data rather than you having to create your own so that it meets that independence test is quite hard. And we're very satisfied that the adoption of relative net promoter score does tell us that whether we're continuing to maintain that advantage and that differentiation or not. So we're very comfortable that it's a good inclusion in the remuneration structure. Robert, again, I hope I've answered that. Robert, any other question?
Yes, Tony, two questions from Mr. Anthony Fells. The first is, why give the CEO share incentives after the share price has dropped by half? Surely any bonuses should be related to restoring the share price to previous levels last year. And the second question was, I've just lodged a question and I didn't put my name on it. Anthony Fells here. Many company directors have taken a pay reduction during COVID-19, especially where their share price has suffered. Why won't Bendigo directors do the same, or at least not seek an increase until the share price is restored to levels of 12 months ago?
I think, again, thank you very much for the questions. I think that we've answered the second one. We are actually taking all board members, and that includes Marnie as a board member, as managing director, are taking a 10% pay cut for a 6-month period, recognising that everyone is going through difficult times and that we need to be bearing part of the pressure and pain and responsibility, or not responsibility as much as the pressure and pain associated with the situation we're in and the bank's in. So I think I've answered, or that one's been answered. The first one is that the bank share price, this is a program that we've put in place that we think will cover, for many years. And we think that aligning executives' remuneration with the share price and shareholder outcomes, is absolutely the right thing to be doing. And we think the fact that it's starting in this year where the share price is low, we think it's an appropriate year to be making that change in so many ways. And we think that it'll help create the change in the business, but also lock people into the business that are critical to making that change over a long term. And so it'll end up being an enormously rewarding outcome for shareholders. I do think that the other part of this program, because it'll be in place for a number of years, as the share price rises, the hurdle that they need to be achieving or passing each year for these to have value grows. And the last observation is that Marnie's deferred base pay was set some time ago based on a higher share price. So certainly Marnie continues to be directly affected by the current share price. And I hope that answers the question. Robert, are there any other questions?
No, Tony, there are no remaining questions for this section.
Well, thank you, Robert. So we're now going to move on to item 6, allocation of shares to the Managing Director under the Loan Funded Share Plan. As mentioned, the new Executive Reward Framework has two separate equity grants. The first is the proposed grant of shares to Marnie Baker, the Managing Director, under the Loan Funded Share Plan. This provides a loan which is a non-recourse, interest-free loan from the bank for the sole purpose of acquiring shares under the Loan Funded Share Plan. The loan is repayable at the end of the 6th year. The total loan value is $2,550,000. This is repayable at the end of the 6th year. The grant is split into 3 tranches, each with different vesting conditions. 50% of the grant is to be measured against cost-to-income ratio. To satisfy this target, the bank is required to make significant improvements in the bank's cost-to-income ratio, consistent with the bank's stated objective of lowering its cost-to-income ratio towards 50% over the medium term. The next 25% of the grant is to be measured against market growth. The market growth target will require the bank to grow our deposits and loans faster than system and to increase its market share. The final 25% of the grant is to be measured alongside customer advocacy, relative net promoter score, where the bank's net promoter score over the performance period, measured using a 6-month rolling average, must be 20 points greater than the average performance of a peer group of Australian banks. The non-executive directors of the board unanimously recommend that shareholders vote in favour of this resolution. The direct voting and proxy details received prior to the meeting are now being displayed for your information. For those listening by telephone, the direct votes and proxies received, as at the pre-voting cut-off time, are, and I'm not going to fall for the same mistake again and read from the teleprompter. So the for, we've got 88.79%, against is 7.35%, and open is 3.86%. So, in response to part of the previous question from the shareholders, I think we're now going to throw to questions. In response to part of the previous question from the shareholder in Bel Air, South Australia, about item 6, the bank's approach to remuneration is balanced and focused on the creation of long-term value. The view of the board is that remuneration which is leveraged towards short-term can create a disconnect between an individual's interest and the long-term interests of shareholders and other shareholders and customers. Therefore, our executive remuneration approach is weighted towards fixed remuneration and equity that vests over the longer term. I'll now ask Robert to read the questions that have come through. Robert?
Tony, there are no questions for this matter.
That's wonderful. So on that basis, we'll move to item 7 of today's agenda, the grant of performance rights to the Managing Director under the Omnibus Equity Plan. This item asks shareholders to consider and, if thought fit, to pass as an ordinary resolution a grant of 36,376 performance rights to the Managing Director, Ms Marnie Baker, under the bank's Omnibus Equity Plan, on the terms summarised in the explanatory notes in the notice of meeting. The second equity grant is the proposed grant of these 36,376 performance rights to our Managing Director, Marnie Baker, under the bank's Equity Executive Plan. The 4-year performance period of the grant runs from the 1st of July 2020 to the 30th of June 2024. The grant is linked to relative total shareholder return and subject to a risk and compliance gateway. The non-executive directors of the board unanimously recommend that shareholders vote in favour of this resolution. The direct voting and proxy details received prior to the meeting are now being displayed for your information. So for, it's 90.06%, against is 6.08%, and open is 3.86%. We did not receive any questions on this item ahead of the meeting, so again I'll ask Robert to read the questions that have come in during the course of this meeting. Robert, are there any questions?
Tony, there are no questions from shareholders on this matter.
Wonderful. Thank you, Robert. I'll now hand back to Jackie.
Thank you very much, Tony. We're now up to item 8, which is approval of our selected capital reduction schemes in respect of convertible preference shares 3, which is CPS 3. Item 8 on the agenda is set out in 2 parts, and for these resolutions I'll read out the full text as set out in the notice of the meeting, where shareholders are asked to consider and, if thought fit, to pass the following as special resolutions. So item 8A, that's the terms and conditions of the selective capital reduction in respect of CPS 3 on the optional exchange date of 15th of June 2021 on the terms and conditions described in the explanatory notes accompanying this notice of meeting, being the first capital reduction scheme be approved, and item 8B, that the terms and conditions of the selective capital reduction in respect of CPS 3 at any time prior to the optional exchange date of the 15th of June 2021 on the terms and conditions described in the explanatory notes accompanying this notice of meeting, being the second capital reduction scheme, be approved. As an authorised deposit-taking institution, the bank is required to maintain minimum levels of regulatory capital in accordance with the prudential standards issued by APRA. From time to time, the bank issues a number of different instruments to satisfy the various elements of its regulatory capital requirements, including instruments that constitute additional Tier 1 capital. The purpose of the resolutions proposed in items A and B is to provide the bank with flexibility as to how it manages its capital, and in particular it gives the bank flexibility to repay the face value of CPS 3 if it decides to do so prior to their mandatory conversion date. The board unanimously recommends that shareholders vote in favour of each of these resolutions. The direct voting and proxy details received prior to the meeting are now being displayed for your information. For those listening by telephone, the direct votes and proxies received as at the pre-voting cut-off time for item 8A are 94.02% in favour, 1.91% against and 4.07% open. For those listening by telephone, I've just read those out, and for 8B, I will read those now. I'm sorry, I've done a Tony, as it's now called. I'm going to read the 8A direct proxy votes again. For 94%, against 1.91% and open 4.09%. For resolution item 8B, for 94.02%, against 1.91% and open 4.07%. We didn't receive any questions on either of these items ahead of the meeting, so I'll ask Robert, have any questions come through online today?
No, Jackie, there are no questions relating to this matter.
Thank you. Approval of share issue under institutional placement, which is item number 9. We're nearing the end of today's meeting, so for those shareholders who've not yet voted, this is a heads up that voting will be closing soon. I'll formally close voting after the conclusion of the next item, so if you have not yet voted, please do so now. But first, let's address our last item of business. For the resolution at item 9, I will again read out the full text as set out in the notice of meeting, where shareholders are asked to consider and, if thought fit, to pass the following as an ordinary resolution. That approval be given for the purposes of ASX Listing Rule 7.4 and for all other purposes for the issue of 26,766,596 fully paid ordinary shares in the bank on the 21st of February 2020, made by way of institutional placement as described in the explanatory notes set out in the notice of meeting. You may recall that earlier this year in February, the bank issued a number of shares in order to raise approximately $250 million, the proceeds of which have been used to support the growth the bank has been experiencing in its residential mortgage business, to further strengthen the bank's balance sheet and also to provide an increased buffer above APRA's unquestionably strong CET1 capital ratio requirements. The capital raised also provided flexibility for the bank to invest in technology and regulatory-related change initiatives. As the bank is limited as to the amount of equity it's able to issue without shareholder approval, the passing of this resolution would enable the bank, subject to market conditions and the receipt of necessary approvals, to offer a new ASX-listed additional Tier 1 capital security in the first half of the financial year 2021, alongside the potential repayment of its convertible preference shares too. The Board unanimously recommends that shareholders vote in favour of this resolution. The direct voting and proxy details received prior to the meeting are now being displayed for your information. For those listening by telephone, the direct votes and proxies received as at the pre-voting cut-off time are for 88.08%, against 7.31%, open 4.61%. Robert, I believe we received one question on this item ahead of the meeting.
Yes, Jackie, we received a question from a shareholder in Cairns, Queensland, which reads, "As a small shareholder, I was most distressed to see on my ballot paper the request for me to give permission for institutional firms to purchase new shares. There is no mention of small package shareholders being given the opportunity to be part of this scheme. I would like you to include all shareholders, please."
Look, thank you for that question from the person in Cairns. Some of these resolutions are quite technical in nature, but to be absolutely clear, this item of business related to our prior capital raising in February earlier this year, which was to institutional shareholders and then followed via a share purchase plan to all shareholders. So both small and large shareholders could and did participate. I hope that clarifies the resolution. Robert, are there any more questions that have come through online today?
Yes, Jackie, one related question to the former question, but from shareholder Mr Craig Caulfield. Why are shareholders in Bendigo not given a greater opportunity to participate compared to institutional investors?
Thank you, Mr Caulfield, but I think the previous answer is exactly the same one in relation to your question as well. Any other questions, Robert?
There are no further questions, Jackie.
Okay, thank you. Now that we've concluded all items of business for today, I do have a few more questions that have come in and I will do those, but I will say that the voting window is now going to be closed. The results of the votes will be released to the ASX later today. There are a few items of business that have come in that people have said they wanted to raise in general business. I will go through these quickly because on the whole they are from people that have had ample opportunity to ask questions. So Robert, if you could summarise the questions briefly and I will answer them briefly so we don't leave anyone hanging without questions today.
Yes, Rita has asked, when a bank assigns all rights and obligations of a loan to another party and the bank becomes the servicer, who is the true mortgagee?
Marnie, could I perhaps get you to briefly comment on that?
Yes, the bank is.
Thank you. Next question, please, Robert.
Question from Milton Wild. Is it still an accepted practice for the Bendigo Company Secretary to screen all communications to the Board and to deliberately prevent the Board members from responding?
That is not our policy. All Board members see all communication that comes in from customers. However, I would note that it's management's responsibility to deal with customers and so that's how we operate. Next question, please.
A question from Mr Anthony Fells. What is the time frame for the bank to deal with all outstanding Code of Banking Practice issues, particularly those that CEO Marnie Baker defended to the Royal Commission on the grounds that Rural Bank was the only Australian bank that was not a signatory to the Code of Banking Practice?
Marnie, perhaps you could comment on that briefly.
Yeah, well, just in relation to that, I think you were referring to actually the CEO of Rural Bank, Alexandra Gartman, in front of the Royal Commission. The matter that was before the Royal Commission was a historical matter, and at that point in time, they actually weren't a member of the Code of Banking Practice. Since that time, Rural Bank was, but I think it's also very important to understand that last year, Rural Bank, we decided as a group that we would hand back the Rural Bank banking licence, so we now only have one banking licence for the group, which is under Bendigo and Adelaide Bank. So of course Rural Bank, as a division of Bendigo and Adelaide Bank, is absolutely covered by the Banking Code of Practice. And in relation to the start of the question, any matters that we do have that relate to the Banking Code of practice, any of those timeframes are agreed with the regulatory body there, the Banking Code of Compliance Committee.
Thank you, Robert. Do we have any more questions that are new or not repetitive, please?
Yes, Jackie. So we have a shareholder from question from Miss Gillian King, which we received after item 2 had been voted on or passed. Miss Hay is also a director of AGL Energy. How can she be chair of the board of BEN, which is dealing with and trying to mitigate that damage and its consequences, yet is also on the board of AGL, which is causing damage to the climate, our climate?
Thank you for that question, Ms King. This is not a meeting of AGL, but I would say in regards to myself that I'm very focused on orderly transition in our energy market, and I get to be very aware of climate issues and I take them very seriously. And in terms of the Bendigo Bank, I think I've covered what we're doing, and I thank you for your questions, and we look forward to our continuing efforts in this area. Any other questions, Robert?
Yes, question from Ms Donna Smith. Staff wages have been mentioned numerous times, but not those ordinary staff on salaries. Is there any plans for those staff members to receive a pay rise as they're not covered by the EPA, so are not receiving a pay rise at the end of the year?
So all our staff are very important. I think I've covered that and Marnie's covered that. In due course, as we do every year, the executive and management will consider that. We haven't made those decisions yet, so they will be something considered as we do every year again this year. Any other questions, Robert?
Question on process from Mr Milton Wild. Shouldn't a question regarding Mr Fells have been read before the vote?
Sorry, Robert, could you repeat that question? I had a little bit of trouble hearing that one.
Shouldn't the question regarding Mr Fells have been read before the vote?
Thank you. Sorry for that hiccup in our audio. To be clear, the pre-votes that we read out today were the voting that occurred prior to 11 a.m, I think it was on Sunday, when the voting closed pre the meeting. Everyone had a chance to vote again today. So the votes that I talked through and Tony talked through were not impacted by the order in which questions were asked today, and I think we very fairly replicated and informed the meeting today. So thank you for that. Next question.
Mr Fells has asked the question, is the bank still proceeding with any debt collection processes that commenced prior to the BCCC scathing report of Bendigo and Adelaide Bank, other than those relating to Great Southern?
Yes, so the BCCC was related to a debt collection process issue. We are disappointed with that. I'll ask Marnie to comment in just a minute. We're very disappointed to that. To be clear though, it related to debt collection processes in a small group within the bank. We have, I think most of the issues related, if I'm correct, around 80% or so, but happened in 2015-16. As you would expect, we've put some processes in place and fixed those. To be clear, it related to, as I said, debt collection processes. It did not relate to the enforceability or validity of the loans. But Marnie, is there more you could add?
I think you've pretty much covered it, Jackie. They were historical in nature. We have addressed those. There is a remediation program in place. It does relate to procedural issues. It has no bearing whatsoever in relation to the validity and enforceability of the loans.
Thank you. Robert, is there more questions? And I do apologise, we did close these general questions earlier, so I apologise to people putting them through now. We'll handle them very quickly. I'm conscious that for all shareholders, they've been on the line for 2.5 hours, so I will handle a few remaining very quickly and then we will need to close the meeting. Robert, what else do we have?
Jackie, we have a couple of comments, but aside from those, we have a question from Milton Wild. Why have shareholders been able to vote twice?
Thank you, Mr. Wild. They haven't. Some shareholders or any shareholders who wanted to could vote prior to the meeting. Shareholders can vote at the meeting. Their choice is whichever they would like, but it's one or the other, not twice. Next question, Robert.
And a question from Mr. Anthony Fells. Will Bendigo Bank amend all improper dealings of Rural Bank with customers excuse me, prior to signing up to the Code of Banking Practice?
Marnie, you may have answered this, but I'll leave that with you.
Yes, and regardless of whether they were a signatory to the banking code at the time, the same principles we adopt within our organisation. So anything that actually related to that period of time, regardless of whether whether Rural Bank was a signatory to the Banking Code of Practice, is irrelevant in some sense in that we will address those as we would if we had have been a signatory to the account. And in relation to the Royal Commission and the question that was asked before, all of those issues have been addressed.
So thank you, Robert. I'm again very conscious of time. Are there any new questions from different shareholders that we haven't yet been able to answer?
No, Jackie, there are no questions on topics or from shareholders that we have not yet answered.
Thank you. So thank you to those shareholders that put questions in, and I confirm that voting has closed. I wanted to finish by thanking everyone for attending today's meeting and particularly to those that asked questions. It is our hope that next year we'll be able to see you in person again. Until such time, please stay safe and stay in touch with us. I now declare the meeting closed. Thank you.